How does this?
Verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation. James chapter 1, verse 12. Blessed is the man who remains steadfast under trial, for when he has stood the test, he will receive the
Good morning, everybody. Good morning, good morning, good morning. Hopefully you guys have had a good weekend so far. I feel like I'm getting sick and it sucks, but you know, gotta show up regardless, right? I do have a question though for those of you that are on right now. Can you see everything okay, hear everything okay? And I have music, a little bit of music in the background. Let me know if the volume's okay for you. Again, I don't want it to be overpowering or distracting, so I need you guys to let me know. Yeah, so there should be no latency. Should be like barely a lag. But yeah, if you could just give me a 1 in the chat so I can know. I can't check on my end. It looks good, but I want to know, can you guys read the letters in here? Let's see. Sound and video quality solid, barely hear music. You could hear it a little bit, right? I just want it to be in the background, you know what I mean? Same stuff we do in the private group, right, Emmanuel? So yeah, with that being said, again, I hope you guys had a good weekend. It's about to be over, right? Let me see. So he canceled the attack. If price wasn't bullish on the indices, if it wasn't going to start last week with a huge displacement higher, this may be a catalyst that makes them run price back up. So we'll have to just wait and see. We're going to take a look at seasonality. We're going to do our weekly analysis. So, monthly analysis. And then, we'll look to do part of our weekly analysis, and then we'll go to the daily chart and then get a feel for, what's to be expected. But for those of you that are new, I always like to start with this. Kind of gives you a rough understanding of what we talk about on these Sunday calls. I'm not just giving my opinion. I'm walking through a whole process that I use, which those of you that have been with me for a long time, and those of you that are planning on being here for a long time, will end up seeing how accurate it is and how valid this process really is, and how important each component to this process really is. Okay, so we do a full risk on, risk off analysis. We talk about major position context, just higher time frame direction for like the next week to a month or more. Because it's a new month, we're going to do a little bit deeper of an analysis. I may look into COT. Haven't looked at it in a while, but I like to check it out. I have taught how to use it. It's not something you use every day. That's one issue with a lot of the longer term perspectives and tools. People think that because they're a day trader, they think that seasonality or COT should align with every single price swing, and that's just not the case. So it's not a be-all end-all, but they are helpful if you want to start looking into how to call moves like we are, weeks in advance, and be able to keep your bias and narrative for weeks at a time and not be such a flip-flopper, right? That comes from a depth of understanding about those higher time frames. Good morning, Maddie. Appreciate you hopping on, bro. But yeah, so we'll talk about some of that stuff. We'll talk about liquidity mapping, different PD arrays, how to kind of identify the stuff that's important. Power 3, obviously, we'll talk about when I start talking about the news. Every week, you should come into the week thinking Power 3. If you're bullish, you want to think bullish Power 3. And the best buys will come from below Sunday's open price. If you're bearish, you want to think bearish Power 3. And the best sells will come from above the open price on Sunday. So today, later on today. Okay? And then, of course, market maker models, they fit really well into that. Like if it's a bearish Power 3 and price rallies up above the open price, what is that creating, right? It may be reaching for a daily PD array if we're bearish to look to go lower. So that initial Sunday, Monday, sometimes it bleeds into Tuesday manipulation prior to the expansion phase of the week, which is on Tuesday and Wednesday generally. When you see a rally up and you think bearish Power 3, you can also consider the fact that there's a market maker sell model probably unfolding as well. So those two concepts dovetail together. They can be used as a framework, or they could be used as an entry tactic, right? Maybe later on I'll get into how you can utilize market maker models and the phases themselves as an entry model or way to position yourself in the marketplace. So if you guys are interested in that, maybe I'll talk about that a little bit later. But yeah, there's a lot of stuff that we'll get into. Talk about validation, invalidation, of course, the euro indices, and then if we have time, and you guys want me to, we could look at some other assets as well, like gold, silver, crypto, whatever, individual stocks. It doesn't matter, right? We're able to navigate any asset with what we do. So yeah, stick around for that if you want any particular chart looked at. So yeah, and if you haven't screenshotted this over the time that you've been with me, and you still don't have a plan or a process, or you don't think you can analyze the chart on Sunday to prep for the week in a confident manner, this is literally giving you the answer on how to do that. Okay? So definitely screenshot this, organize this, and then you have a process. And I do it every week. So if you don't know how to use it yet, or you're not fully able to do it on your own, just show up every Sunday and I'm literally teaching you how to do it, right? Like in the most detailed possible way. Which again, that's why these are long videos, because I have to explain everything that I'm doing, the thinking, why things are important. So you get context, not only, oh, hey, my name's Christian, I think that the NASDAQ's going to go higher, right? So you should look to buy this week. That doesn't do anything for you. So you get much more than that here. So again, if you're new, stick around. We'd love to have you stick around and ask questions and, get some value. You know what I mean? So, but yeah, with that being said, let's actually move this. Another thing that I want to pull up, another screenshot, another piece of the initial thought process. Something very important is what I classify as liquidity mapping. So if you haven't taken a screenshot of this either, I encourage you to do so. This is basically my liquidity battle plan, liquidity list. And we utilize this stuff every single day. If you don't understand the 20, 40, 60-day look back, cast forward, you don't got to worry about it. It's just something that I use as well. It's not overly complex, right? You take the current month that we're in and you look back, right? So from the first, you look back 20, 40, 60 days. And then you also cast forward 20, 40, 60 days. The look back is showing you liquidity from those time intervals. So 20 days, which is short term, 40 days, which is intermediate term, 60 days, which is more so long term. And then you just look for the liquidity that aligns with wherever that line takes you for the 20, 40, 60 days. You count the candles, 20 candles back, 40 candles back. So you count them individually, and you're excluding the weekends. This is a mistake I see a lot of people making. So yeah. And then when you cast forward, it gives you a projection as far as where certain short-term, long-term, and intermediate-term highs and lows will form. Okay. So that's a backtest study that I will leave you to go do. What I just said there is literally all you need to understand about the 20, 40, 60-day look back. You can get more advanced with it and, take this perspective, realize that it's fractal, and then whatever time interval you look to observe, you can actually use a very similar look back, cast forward idea. But we're not going to get into that at the moment. But yeah, hopefully that makes sense for those that may not have understood the 20, 40, 60-day look back and cast forward. When you go back test it too, you're going to be pretty shocked. I know I was, especially with the cast forward. I mean, it's just clearly controlled, right? So, observe highs and lows that form at those times and what transpires to get it to setting up that high or low. Okay. So very helpful study. Let's go ahead and do that. But again, we have very, obvious liquidity pools to observe. That's why this list is so powerful, because they're not only obvious levels that the market can't hide from you, they're always there. Every single day there's a new daily high. There's a new London high and low. There's a new weekly high and low. And there's previous weekly highs and lows. There's monthly highs and lows every month. There's previous monthly highs and lows as well. And if price is reaching towards those levels and we're close to them, sometimes they could be used as targets. And then, of course, the lower time frame, I have references there as well that we utilize, like London highs, London lows, like I said a second ago. So basically session highs and lows. You also have previous AM and PM session highs and lows. If you're trading on Monday, you want to look at Friday's high and low, because if we're trading within that, that's the first thing, the first range, the first liquidity pool that has to get wiped out, either to go higher or lower, or go higher to go lower, or lower to go higher, given Monday's trading. Sometimes Tuesday too, if Monday's very slow and we stay in that Friday's range, or if Friday's range was really large and we were back inside the middle of it, and both the high extreme and low extreme haven't been taken out. So that's important for Monday's trading. So tomorrow, for example, I will be keeping tabs on this. We're going to identify these things as well in the chart, as we always do. So for the bonds, yields, DXY, indices, currencies, and then again, any other stuff that you guys want me to look at if we get to it. And then, of course, you want to also pay attention on these lower time frame references. That first hour of the open, right? So from 6:30 a.m. Pacific Standard Time to 7:30 a.m. Pacific Standard Time, the high and low extreme, that's significant, right? Because if it's going to target any of these other liquidity pools in that first hour, if we have that high and that low that forms and we're inside that range, many times you could frame a setup to target one of those levels, if not both. We could run up, take out the AM session, current AM session open, like that first hour's high, to then go down and take out the first hour's low, while it's looking to take out something like the previous day's low, weekly low, monthly low, or some inefficiency or other PD array that's below us in price. So again, when you're looking at this list, you also want to consider, because when price goes higher to go lower, there's an anchor point to that high, like where it reacted from, what liquidity pool is right there. And then there's also a target in that structure, right? In that framework, that understanding. So a lot of times you'll see, for example, to just drive this point home, many times you'll see something like London's high, if we're bearish, get rallied up into in that first 30 minutes, first hour of trading, tag it, especially if there's a PD array on, like, say, the daily or the 1 hour chart, that then gives us a response away from it. If we can see that set up, and we're bearish, we could anticipate that being counterparty liquidity. Obviously, there's some nuances and whatnot, but I'm trying to keep it conceptually simple so you understand the thought process, how to utilize liquidity from a counterparty to targeting perspective. Because there's an opposing side that gets swept. Specifically, we have a list of liquidity pools that get swept. Obviously, you can take this and get fractal with it and look at like hourly highs and lows compared to 4-hour highs and lows, right? You could look at, or when you go to the lower time frames, you could look at also 15-minute highs and lows, right? So maybe 15-minute high from an hour ago, or even just like a half hour ago, gets swept, and then we all of a sudden tank, and the deeper context is showing that it's going to be bearish. You could then look for one of these levels to be targeted as well for counterparty and targeting if we're going to the downside. So higher to go lower, or lower to go higher. This just adds another layer of importance or significance to why it's so important to always look for stop runs and study the crap out of them. I didn't get this perspective just by hearing someone make a lecture. I got this perspective and this list by just gathering all the information, all the different common liquidity pools that have been spoken about. And then also my observation, seeing how London's high or session highs and lows get swept and then almost always reach for, say, previous day's low if we're bearish, right? It's my favorite liquidity pool the London high and low, and previous days highs and lows. The previous 3 days highs and lows. I don't, do I have that here? No, I don't have that here, unfortunately, so I have to update this. But yeah, I don't have it. But the last 3 days highs and lows are also significant, okay? They're also very significant. Can you explain later what and how we have to anticipate forward? You mean just like show you the process of how to analyze 20, 40, 60 days? How and what we have to anticipate forward. Okay. Yeah, no worries. No, I'll do that for you. So yeah, and then like I mentioned a second ago, the last 3 days highs and lows are significant for the like normal weekly delivery. If you're looking at a very large perspective, again, this is a fractal idea. So if you're looking at the monthly chart, the last 3 months of liquidity is significant for that time frame. The last 3 weeks, right? If you're just resonating with the weekly perspective, say you're like a swing trader, or you want to do the analysis on the higher time frame in effective ways and spot the near-term liquidity. This is also something that a lot of times replaces the 20, 40, 60-day look back, cast forward. But everything it's all good to have a confluence of things. You know what I mean? But again, if the data ranges you find are too confusing for any of you, again, there's always a substitute for the most part. But this concept especially. Okay, so again, in terms of liquidity, this list, the last 3 days, the last 3 weeks, the last 3 months, depending on what perspective I'm analyzing, first presented fair value gaps of every hour, those are significant. New day opening gaps, I think I have it mapped out here. New day opening gaps in particular from Mondays and Fridays, extending them over to the next week. Generally, that's going to be very helpful. So I had something I was gonna mention, but I forgot. But yeah, overall, when it comes to liquidity, this is kind of how simplistic I keep it, right? I'm thinking counterparty target. I'm thinking bullish or bearish power 3, market maker buy or sell model. And inside of that, I'm considering these liquidity pools. And I'm thinking, again, counterparty to target, right? And then supportive ideas come from that higher time frame narrative as well, okay? So that being said, take a screenshot of this if you haven't already. Again, I mentioned that the first presented fair value gap could be used in every hour. There's obviously a main one for the New York session, which is at the 6:30 open, right? Whatever the fair value gap that forms a little bit after that 6:30 time, not at 6:30 a.m. Pacific Standard Time. If the fair value gap is coupled to the open, it's not what you want to use. And you want to try to identify, like if you have like a tiny one that's like 4 points and it's the first presented fair value gap, just wait a minute and try to capture one that looks a little bit bigger, right? A little bit nicer, not so tiny, because I've noticed over the studies I've done on this concept that the small ones, although they still do have a role to play, they are still part of the inefficient price delivery if it's left available or traded through. But the ones that I have found that are more, I guess, impactful are ones that are a little bit more beefy, not 2 or 3 points or 5 points, maybe like 10, 15 or more points. Generally it's going to be a little bit better in my opinion. So yeah, hopefully this makes sense. Screenshot this. I'm gonna have to update this because it's bothering me that I don't have the Sunday and Monday, or Friday and Monday's new day opening gap idea. And then the last 3 months, 3 days, and 3 weeks of liquidity pools. This allows for you to never run out of liquidity to target, by the way. Think about it. Think about what I'm telling you here, what I'm putting in front of you in an organized fashion. Navigating liquidity. What highs and lows are important? which one should I aim at to target? Which one should I look at to get swept and then expect a reaction from if I'm bullish or bearish? Go into your chart and look at these liquidity pools, not random highs and lows. And again, you can take it further later on when you get more comfortable with this, and start to navigate really micro intraday volatility using 15-minute highs and lows, 4-hour highs and lows, as well as 1-hour highs and lows. And you can even use 5-minute highs and lows too. But again, all those lower time frames below the 1 hour, they're working inside of a bigger context. So the bigger context will be more important to focus on rather than something you may see on the 1 minute or 5-minute chart, right? Remember, those lower time frames are absolutely useless if you don't have context that makes them important. Okay, you want to have context. I have some friends that only trade lower time frames too, like the 1 hour and below. For me personally, I don't see why that's something that they do, but they're effective with it, and to each his own. But from in my opinion, for what I'm sharing, because that's all this is really at the end of the day. The way that I like to look at things, I like to have bigger context. You guys see 1,000-point moves that I'd be calling out, 500 plus points I'd be calling out all the time. There's stuff happening constantly if the higher time frame is setting something up, which it has been because of all the volatility. It may not forever be that way. It may slow down at some point, but even still, because we're rooted in higher time frames, because we understand how to navigate liquidity properly and what levels are significant to look at, we're able to position ourselves fairly nicely. So yeah, make sure you take a screenshot of this. I'll update this and give you guys a copy of it after the call. But yeah, with that being said, hopefully that makes sense. Do you guys have any questions? Again, just a reminder, just want to make sure everyone's aware. These calls are not, hey, I'm showing up to listen to Christian tell me buy or sell. These calls are like me having a group one-on-one with you, sharing my perspective where I think price is going to go, which again, the process has been proven over the last 4 years, 2 years publicly, going on 5 years privately with my mentorship students. So, just make sure you are understanding this is not a call that's going to end in 5 minutes, right? We're going to answer questions. You're free to ask any questions, and I'm here to support you guys. You know what I mean? I'm here to really get you guys understanding what is required and what you need to be doing, and help you overcome any of the issues, while also giving you an analysis that you can use to walk forward for the rest of the week, and giving you a process. So these are jam-packed, so just have a little patience. Again, if you have any questions, let me know. And yeah, so hopefully what I already have shared so far, if you've never heard me talk about that or you've never thought about things in this way, hopefully you see the value in that when it comes to the liquidity. And then, of course, just the overall outline of what we're going to get into. So one more thing I want to get into before we look at the news. So we're going into August in here. We can actually see August. It's a little bit back there. So we could see that it's real chaotic in August. Like you could just visually see, it looks like it has a bearish undertone, right? All three of the lines somewhat agree in this point. I think that's like the beginning of August. It does show that there's a high that forms. We interestingly can see that there's an SMT there, which is interesting for the overall data. But for the most part, seasonality, right? Every month we want to observe this stuff. You don't have to look at seasonality every day, every 5 minutes. It's not something that you're going to use to take a trade probably tomorrow, right? It's just going to be an underlying helpful resource. If price does end up trending or consolidating, you're able to go in here and then get a rough idea of where the highs and lows seasonally form, and then also moments in the year where extreme bullishness or extreme bearishness or consolidation may be likely relative to the last 5, 15, and 27 years, sometimes the last 40 years, like with the dollar index. So you can imagine after 40 years, if this is what the data looks like, nothing near term is going to change these characteristics. And seasonality, again, all you got to do is spend a little bit of time studying seasonality, and you'll end up seeing how powerful it is. A lot of people take these concepts and things like COT, they learn about it, and then they go in and try to apply it on the next trading session as if it's telling you there's a buy signal there or a sell signal just because it's bullish or bearish on the seasonal chart. And then of course they say that it doesn't work, it's useless, and they're not going to use it because they don't understand what they're talking about or doing, because maybe someone didn't teach them or tried to hype it up as a tool that's more than it really is. It's like a treasure map long term, like macro perspective. And you guys wonder how I continuously can be in line with the market. It's not only the technicals, but I'm referring to things like this on a monthly basis. So there's things on the back end that helps support my conviction behind a particular narrative. And the reason the conviction's there is because, again, look at the result. Look at how often we're correct. Long term, not even just short term, right? It's fascinating. It really is. And it's ironic here too. Wait, I thought that was the Dow. So you guys realize, I'm gonna give this to you guys before I move on. It's gonna be very, very eye-opening for you. So let me know in the chat. Have you been here the last 2 years to watch me call the low of the year, both years straight in a row? Let me know in the chat if any of you guys that are here today have been with me and saw us do that publicly. Okay, Emmanuel wasn't here. Yeah, you came a little bit late, a little bit later in the year. Okay, Maddie, you're new too. Fortunately, yeah. No, it's all good. Let's see, I want to see if anyone's here that was with us in January, and then especially in March going into April. Because the last 2 years, we've been able to call the highs and the lows of the year, okay? And again, you could just simply go back to the video around that time and then observe what happened and observe my commentary, because again, it's recorded. That's the beauty of what I do. Everything is recorded, so you can verify what I'm saying and not just take my word for it, because why the hell would you do that anyway? This is something that you're trying to put your life behind to give you a better life. And you're really going to take that for granted, right? By just blindly trusting people? I wouldn't encourage you to do that. So anything that I say, if it sounds like, oh, he's maybe exaggerating, go in and look at some of the videos so then you can prove it to yourself. Or, have that, suspicion or doubt, stick with us for a couple months or even just 1 month and just see how this stuff works, right? See if what we're talking about works out, if there's any validity behind the things that I talk about. And, whether these statements that I say publicly are actually true, right? Like, do we find setups every day? Emmanuel, I can definitely, you're in the private group. So Emmanuel, every single day, what do we do in the private group? Do we find setups every day, or is it hit and miss? We're not really doing much. And it's just BS, right? Do we find setups every day, or is it BS? Is that statement that I say not true, or is it true that we find setups every day? Literally every day. Let me know in the chat since you're part of the private group. Anyone else in the private group too, if you're here, you could chime in as well. Again, I'm taking you somewhere, right? With this. So yeah, just throw it in the chat. Every single day, at least twice, from 8:30 a.m. to 11 a.m. Eastern. See, absolutely. And Emmanuel, I'm not paying you to vouch for me, right? There's no, malicious convincing going on. It's just based on your experience, right? And you're with me every day, right? Like a handful of other students are as well. So with that being said, the accuracy and all that, me being correct every week, being able to have conviction behind my ideas, being able to call the low of the year 2 times in a row using the same concept. And that particular concept is this. Okay? That particular concept, or a particular concept, is seasonality. Okay? You see how March going into April, there's a seasonal low. All 3 lines agree in that level as well. And there's a rapid expansion to the buy side, right? In this case, it's for the Dow. So if we take that low, come over here to the NASDAQ, because again, the indices are indices, right? So the seasonality chart is a paid service that I go through. It's called, the guy is called Steve Moore. I'm obviously subscribed to it, so I screenshot. And for those of you that can't purchase his service, which I think is very reasonable and worthy of the money that it costs, should be more expensive. It should be like $200 a month because it's so good. But I take screenshots of it, and then I bring all of them into my private group, and then you guys can take it from there as well. I think I also have them in the free group too, so I think I share that resource. You can also screenshot what I just showed you, but this is only showing for August, right? I have screenshots and data for every single month, and we do this every month, right? So that is the resource. His name is Steve Moore. But we saw that late March going into April, there was a seasonal low that formed, correct? You guys saw that visually pretty easily, right? You see that very obviously right there, okay? If we move over to the dollar, you can see that a seasonal high forms and we go lower, right? Late March going into April. If we move over to the NASDAQ, right? Late March, it's a little bit sooner, right? But nonetheless, late March, so midway through March, going into April, there's a seasonal low. All 3 agree around this time. It's not going to be to the day perfection, but you can see that the undertone is there. All 3 lines agree to be bullish around late March going into April, and they set a seasonal low in both the Dow, the S&P, and the NASDAQ. And all 3 lines agree. That's a heavy seasonal influence. So with that being said, what was to come over here, pull up the continuous contract for you. Again, I'm trying to drive home a point about seasonality and some of the tools that I use. So, so if we go over here, take a line, February, March, going into April, just like the seasonality outlines, and then extreme bullishness, showing that all 3 lines agree. Okay. Every asset has a seasonality chart too, so whatever you trade, you could use it. Like currencies have them, and the dollar has it. Bitcoin eventually is going to have a reliable seasonal influence, right? So the same concept applies for all those other assets you look at. But you can see that the NASDAQ has a low that forms there, and all 3 lines agree aggressively, right? And you start to see these lows and highs where all 3 lines agree at a particular time in particular quarters, because that's what these green lines are, separation of quarters. So first quarter starts here in late December, December 15th, 16th exactly, goes all the way to, what is that, March? I'm running a blank on the specific quarters. Let me actually pull that up. Where the hell is it? Yeah, so I'll pull this up so you guys have it as well. Okay. There's your outline for the different quarters. So December going into March, yeah, I was correct. And then March going into June, And then June 16th, 15th or 16th, it sometimes varies depending on when the open interest shifts. Then that goes to September, and that's the third quarter, and then the fourth quarter starts in September to December 16th, and then it starts over again. So the New Year's quarter, the first quarter of next year, starts in December, right? But this is significant, right? Because you get to see the different moments in time. Remember, time is important, even when you're on the higher time frames, right? So time elements are not only present on the lower time frames. In a macro perspective, there's ways to use time as well, right? They're just longer intervals, but you can kind of see how seasonality is also helping you identify seasonal lows and quarterly lows, along with quarterly highs as well, and stuff like that, right? And seasonal highs, right? And moments where consolidation could potentially be likely. So what is that? What does consolidation and seasonality tell you? It tells you that things may be a little bit more tricky. But again, coming back to the low there, right? Like I said, there's a seasonal low there. And it's going in March going into April. And there was a news event, the Iran war, that was the catalyst for that to take place. Then when we scrub back, okay, if we come all the way back to March going into April, again, go back and look at the videos that I did on these times, around these times. If you're like, no, there's no way you picked it, go back and look. It's literally there, right? So you can go check it out. I encourage you to check it out, especially if you're new here. You know, anything that I talk about, put me to the test, put my feet in the fire. You know, watch what I'm doing and see if what I talk about has validity and whether you can take some stuff from it, right? Because I'm very encouraged and confident that you can take a lot from what it is that we do. And again, this isn't a be all end all. Some years, like if it's really bullish and it gives like really no retracement. So like this, for example, right? It extended a little bit. Still in April. So that April time horizon, March going into April, right? It's still in close proximity to where that seasonality chart shows. So around from March to April, expect a seasonal low to form in some capacity, right? And you could just go back and see, right? These are 3 examples, but this is how you want to go back and study seasonal influences. And again, it's highly beneficial for you to do so because again, it just gives you a rough idea of what to expect every month, every quarter, right? And think about this too. Every quarter has a power of 3. So there's the open of the quarter there, drops lower, goes higher. Opens here, kind of, you know, takes off, but, you know, it's already set a seasonal low generally. So the new quarter, you know, starts to move, price will get down, set some type of seasonal low, and, you know, April at some point, sometimes early April, sometimes a little bit later, like I just showed you from the examples. But every quarter you could see, right? Accumulation, manipulation, distribution, accumulation, manipulation, distribution, right? So on and so forth. Okay. So again, very powerful tool. Let me know in the chat if this makes sense. I've talked about it before. I felt because again, it's a new month, we do our monthly analysis. So felt like it was a good thing to bring up once again. Okay. So let me know in the chat if that makes sense, what we've talked about so far. And then we'll get into the analysis right now. And again, you guys can screenshot what I just showed and you'll have the seasonal influence charts. Again, if you want a particular one that's, you know, for you, like you want to look at certain things, you're obviously going to have to go get Steve Moore's product. Okay. Maddie said, okay, perfect. I'm not affiliated with Steve Moore. His stuff's just really good. So, I mean, it just, you got to support people that have quality products. And he is definitely one that has a quality product. The best of the best. I've had multiple different ones, multiple different seasonal charts, and there's nothing that compares to his. That literally shows up in price like what I just showed you. The seasonal lows, seasonal highs, moments in time where price consolidates. for whatever reason, his stuff is super accurate. So it's a treasure map, and it's a macro perspective of what to expect going into new months, new quarters, um, so on and so forth. So yeah, with that out of the way, right? If we look at the seasonal, where the hell did it go? Just pull up the seasonality chart once more. In the private group, I have a lot of different resources too. ICT himself has shared a pretty reasonable, rough idea. Like you can kind of see what his outline was. Again, it's not a be all end all, and you don't just take this and assume that this is the case. You take this and go back test it, study it, be confident in what is being showed here. And then, of course, you can make decisions. So yeah, if we come over here and look at this.
So I'm gonna record this here.
Let me drag that over real quick. June. Here we go. So yeah, there's consolidation. So again, August, what kind of month are we going to potentially be faced with? We may get summer month vibes. Okay. We also got Congress. Is it Congress or the Senate? Or both? They're going on recess. There's an August recess. So there's not going to be a lot of big time news events coming out. Not a lot of government movement taking place unless they skip the recess, which I think they should do. We got too much shit for to do for them to go on vacation while everyone is dealing with such, so many issues. That's obviously for a conversation for another day. But yeah, so that's what we're gonna begin the month expecting. Potential, chaotic, maybe hectic price delivery. Does that mean we're fearful or whatever? No, it just means that we're gonna start off with lower risk. At the start of every month, we start off with low risk anyway. You don't just go in gunslinging on the first week, especially with NFP. And that's what we have come in this week. So yeah, let's actually talk about that because I almost skipped over it. So Sunday, Monday, of course, we think accumulation, manipulation. It's NFP week, so a lot of the main trading for me is going to happen on Monday and Tuesday. So we'll see what it wants to do. You want to think power 3 when you see these days being listed for you. Sunday, Monday, accumulation, manipulation. Tuesday, Wednesday, acceleration. Sometimes the manipulation will bleed into Tuesday, depending on if we've hit an anchor PD array for like the high of the week to form that would result in the response going lower, or vice versa. If the low is going to form, we want to see Tuesday or Wednesday trade into some PD array on like the daily or 4-hour chart that could lead to the weekly expansion, or having the low get set below the open price, preferably. Sometimes Monday will form it, but again, we'll just have to wait and see. If that's the case, we're in a real hurry to get somewhere, and you got to be cautious because sometimes if Monday drops lower aggressively and then by Wednesday it hits some type of PD array, or even Tuesday if it hits a PD array, and Monday was aggressive, it may look to try to come back on the Monday's fast delivery. Obviously, there's nuances with that. We're not going to get too much into that, but just something to think about. But the overall baseline, Sunday, Monday's accumulation, manipulation. Tuesday, Wednesday's expansion. Thursday, Friday, if we hit a PD array or liquidity pool that's on that higher time frame that's significant and can result in a counter trend move or reaction taking place. Like if we're bearish aggressively on the daily and we hit a daily bullish fair value gap going into Thursday, or it flies through and it hits it on Friday. Many times that's going to be when TGIF can be anticipated, because we've already hit a weekly target, a large range target, and opposing PD arrays generally will trigger in counter trend moves. So you can expect that if it was very quick getting into it, going into Thursday or Friday, depending on which day hits the significant level in that upper time frame, that'll be the day that can present us with a potential reversal, potential retracement. And there's ways to verify and validate whether it's going to be TGIF or not, right? We're not going to get into that when we're looking at the news. But this is just like a rough idea, right? A rough template for you to go with. I talk about this every week. And yeah, so when we think about that and we see these news events, again, NFP has a specific protocol. It's a two-stage news event when we're on NFP day. So if we have news at 5:30 and we had, say, news at 7:30 or 7 a.m. Pacific Standard Time, then of course the first move may be fake. They may try to induce people to get in to the wrong side, manipulate the crap out of them, and then it comes roaring back, right? All the way past whatever that manipulation was in that first news event. That's a risk that you have to consider on NFP weeks or NFP days, because again, it's a two-stage event. Now, things like CPI are one-sided events. So generally, if CPI starts to rip in one direction, generally the stop hunt that'll set up that move will happen before the open, or before that first 30 minutes. Sometimes the manipulation happens within that first 30 minutes. But then once we start ripping off the CPI, generally it's one-sided. FOMC a lot of times is two-stage as well. So, just got to keep these things in mind when you're looking to trade those days. Outside of that particular day where NFP or FOMC is taking place, Monday and Tuesday, again, are the best trading days. The closer that you get to that news event on Friday, the more likely it is that these 2 days here leading up to it are going to be used as setup days or confusion days or time distortion, inviting type of days. Okay. It could be kind of hectic. Is it like that every time? Should you be fearful of it? No. But if you, through the years, start to see that you have an issue on NFP week, on anything past Tuesday, it's probably best that you take this to heart and then kind of put those days to the side and use them just to study. And then, of course, over time, maybe you get more comfortable being able to engage those moments in price. Maybe. But for the most part, if you just chose on NFP weeks to just trade on Mondays and Tuesdays, I think since those are the best trading days and generally they're pretty clean, I think you guys would have a pretty good outcome, right? A little bit more favorable, especially if you're new. If you have like less than a year experience or less than a year with an organized process that you're still, working the kinks out of, it's best to keep these things in mind. Okay. Just like trading in consolidation. If you don't have a plan that you've studied for at least a year with success trading, inside that consolidation, then it's probably best that you just wait, right? And don't take trades until we break out of the consolidation, especially if it's on the higher time frame, right? Which we've talked about before in some capacity. So yeah, with that being said, we'll keep our eyes on this stuff. PMI is pretty violent, so we'll see how that behaves. And then, of course, beyond Monday, we have some of these other news events, and we're going to be cautious when it comes to trading closer to NFP because NFP is on, well, not on, but since it's in the AM session, those of you in my private group will get the chance to observe how we go about analyzing NFP and how we're going to pull out setups, because we will find a setup, right? And we will not be over trading or taking reckless trades. And again, rules are rules. So I encourage you to stop your actual engagements by Tuesday, latest early Wednesday, right? So AM session on Wednesday. Anything beyond that, I think it's more of a, experience-based engagement that you're going to have to rely on to be successful. Anybody can get lucky, right? And that's the reality of it. But again, this is a repetitive process and protocol when it comes to NFP. You can also take it a step further and trade NFP weeks with half risk or less if you must participate. Okay. If you do participate on Thursday and Wednesday going into Friday, you should automatically have lower risk regardless. You can potentially have normal risk here on Monday and Tuesday. I wouldn't encourage it. But again, that's just me. If you don't want to take that advice, that's on you. But through my experience over the last 7 years, almost a decade, for me personally, it's best that I manage risk properly. You know, I can risk normal, but if I'm risking normal, I have one bullet. I'm not going to take a bunch of trades. Okay, it's NFP week. We've had a spectacular month last month. We put on an absolute clinic with everything that we did. From the marathon that I did, being live every single day for, what was it, Sunday, Tuesday, Wednesday, Thursday. I mean, we had absolutely amazing outcomes, and you guys got to see it publicly. And then, of course, you know, all the other times I was live here on YouTube, and then over in my private group. You know, it's been amazing. So why risk so much going into the first week? It's no need, right? So if you're going to trade in the first week of things, because NFP is there, this is the protocol you're going to want to have. Because again, what is the beginning week in the monthly range? There's a monthly power of 3. There's 4 quarters because there's 4 weeks in a month, right? So each quarter has a role to play in power 3. Accumulation manipulation is the first one. The middle 2 weeks is expansion, right? Or acceleration, however you want to describe it, lion's portion of the monthly range. And then if we hit a higher time frame PD array, going into that 4th week, you can expect that they're probably going to use that week to pull against whatever they did. So this is significant. Okay, it's very important. All the stuff that we've talked about so far is extremely important, although we haven't even looked at a chart yet, right? And those of you that realize that, you know, going to get benefit from it. But yeah, this is all I really have to say about the news. So if we jump over here to the bonds and yields now, start our analysis. Again, if you have any questions, just let me know. But yeah. So when we look at the bonds and yields, just a reminder, the yields heavily influence what the dollar is going to do. Generally, if they're cracked in correlation, sometimes, you know, it could be a bit sketch. We could see that there's a giant crack in correlation. This thing is literally going straight up and the dollar is going straight down. When interest rates go up, that means that there's more yield when it comes to holding bonds and being in dollars. So what does that do? That strengthens the dollar. It protects the dollar. You see countries raising their interest rates, like Japan. They're talking about raising their interest rates, which, you know, there's a whole situation going on with that, with the global economy and whatnot, what that's going to do, or when they do decide to do it. But when they raise interest rates, it's to manage inflation and also protect their fiat currency. So when this is rallying, the expectation is that dollars should be rallying too. And then the indices should be falling, and so should the currencies when the yields go higher. But we have an inversion here for whatever reason. We got the currencies outside the dollar rallying with our yield market. And then we also got the indices giving a little bit of a bump too, going through to the buy side. So again, this is all red flag territory, and we're going into a month that has seasonal influence of being a bit sideways. So all of this stuff is telling us cracking correlation, seasonal influence, that's a bit risky. Red flag. Don't be an overtrading gambler in this environment unless you want to blow everything that you've earned, right? And damage your progress, make yourself feel like a failure, you know, all that BS. It may be a little bit more of a tricky month, right? I'm not exempt from that either, just because, you know, we can come in and call trade setups every day with high accuracy, right? I'm not exempt from times where the market just decides that, you know, it's going to want to be a pain in the ass. Hopefully that doesn't happen. And if it does happen, we'll act accordingly. You know, teach you guys a little bit more on how to manage those moments. But yeah, this is just some stuff on the back end we got to consider. But we could see that the yields are rallying and the bonds are declining. Okay, that should drag the indices lower. We actually have these liquidity pools. First and foremost, though, we got this wick, so we're gonna have to pay attention to that. So we'll see what price wants to do in regards to that. We also have this wick here too. Okay, and again, this is the monthly perspective. So it looks like it's in a hurry to try to reach below this low. So I wouldn't be surprised because we're in a new month now. The new candle is going to open up. If we're going to be bearish, I wouldn't be surprised if we get an up candle that forms. You know, depending on what happens with this Iran war and some of the developments that are going to be coming out soon. They left interest rates the same, but they're still talking about they may have to have a hike. So that's an issue. That is hiking the interest rate. Or maybe they're doing it quietly, right? They very well may. You know, so we'll see. They're very dodgy when it comes to answering the questions, right? Like, are you going to raise interest rates? Well, we don't want to raise interest rates. We're going to probably keep it the same, but maybe that becomes something that we may have to do. But I'm not looking forward to doing it, but we may need to do it, but we're probably not going to do it, even though we may eventually need to do it. It's just like, what? Are you doing it or not? Right? And that's what we got to deal with right now. So that's having a reaction in these bonds and yields, because that rate directly impacts what these are going to do. And it's clearly rising. The interest rates are now rising still. So without them saying that they're rising, we can look at the chart and not care about what they're saying. It's clearly going up. It just hasn't been officially talked about. And with that being the case, we're having a Kraken correlation. So we have to keep that in mind, right? So there's lots of things on the back end that can go against you in terms of clean price delivery or logical risk on, risk off when it comes to the interest rates. So that's going to have an effect. So we may have to just put these to the side for a little while, but we're going to do an analysis on this real quick. I'm not going to spend too much time here. But we have, again, this wick here. So that is a pretty large level that's going to be impactful. Okay. Then we have another wick right there. So we'll keep that on the chart. And if price opens up, comes back down, if it stays in that upper 25 to 50%, and then gives us a change in state delivery on like the daily or weekly chart, we'll then look to continue and try to see if we can't get any further up here. We're hitting an opposing PDA right here, being the weekly bearish wick, the up wick. So that midpoint may be a catalyst to send us back down into this wick. This is a balanced price range. So we got buy side with displacement. So a buy side wick with displacement overtaking the whole wick. So if we're bullish, what we would like to see is if price does come down into that and run a little deeper than just tapping the high and then going higher, we don't want to see it break the midpoint. So it's permissible, since we're hitting a PD array, an opposing PD array to the up movement, it's permissible to see the price may want to come back down from this, right? It may hit it, maybe it opens up, wicks up into it, and then tries to come down one more time. But as long as we don't break the midpoint of this wick, we'll still be bullish. And if you want to think about the 3 PDA rule, you could think about this low. We got this wick here. Well, I mean, in my opinion, if it breaks through this wick aggressively, say it's like a big bearish candle that just takes this out, I mean, that's enough for us to think, okay, well, this is probably in jeopardy. If it breaks this, you could be highly confident that something like this longer term would then get targeted. So maybe that's what they're going to do. Maybe they're just hiking it up, wiping liquidity, sucking these people in to then fall aggressively. That may be the case. We may see that happen. But for now, we don't just assume. We go off what price is showing us, and we'll see if the fundamentals will kick in. But because it's August, again, this does have a likelihood of not really doing much, right? So same thing with the indices. So we'll see what happens. But if that's the case for the yields, I think that we can also see that being the case for the bonds too. We're hitting a similar level. Okay, if we measure this out, literally it tapped the midpoint of that down wick right there. We have a wick with displacement. Okay. Let me copy this. Sorry about that. Don't know why it's not there. So yeah, when we're looking at the dollar, we have a bearish breaker here. So we did talk about this fair value gap. Oh, well, we'll get into the dollar in a little bit. But we could see that that's hitting that straight up inverted from one another. It's not typical. That means that something's happening on the back end that we're not privy to. So again, it's elevated risk. It's like you see signs of the enemy somewhere and you're in a battle. You see like you're in World War II, right? And you're sitting there looking around and you see like a Nazi thing sitting there or like a pin sitting on the floor. You're like, well, the enemy is probably around here. They're probably doing something. I just don't know what. That's kind of what happens when you see this type of thing. When the risk on, risk off analysis is cracked in correlation, right? It's something's going on that we're not privy to, right? And if it's not made public, we got to kind of wrestle with the cracking correlation at times. And all you do with that, right, is you look at the asset that you like and then look at some of the other assets and see if some of them are still supporting a particular direction, a particular narrative. If one is out of whack in the list of assets that we look at to determine for risk on, risk off, what price is going to do, whether it's risk on or risk off scenario, if one of them or one basket of them is not fully in correlation, it's not necessarily the end of the world. It is a moment where automatically you should be cutting your risk, like at least by 25% of what you normally use. So if you use like 1%, use 0.75% or 50% of what you normally use until we start to see things get back in line with correlation. Now, there's going to be some of you that are more aggressive, and that's totally fine. Again, I'm just sharing what I do and how I do things, and just circumstances and things that I've experienced and what I do about them when they arise, right? So again, when it comes to this asset, I would really enjoy seeing them open up, maybe wick up into this. We're already inside of this level. We're actually at one of the 8th levels in here. If we were to put the 8th levels, we perfectly hit that 8th level, which is interesting. And again, this is the monthly wick. So again, we'll keep these things in mind, right? So we'll see what happens. I would like to see retracement to then go higher. This is a monthly chart, so it may take a couple of weeks, maybe 1 week of rejection to reach this level, and then another week to start expansion, and then another week to start expansion. And then once we hit the high up here, maybe that is where we get the closure of the candle. Well, this is the monthly chart, so that'd take like what, couple of months to get up there. Maybe from a quarterly perspective, that can happen. But in terms of what we could potentially see this next month do, maybe it sets up moves down into this because it's been so aggressive. We could very easily have a bearish month that just simply looks to reach into this. So then the next month in September, which starts the 4th quarter, maybe that looks to try to bounce from there after setting it up, going into this month, right? Or going into next month. So we'll see what happens, right? Can't predict what it's going to do. There's too many things happening in that regard. So we'll do with what price gives us. But for now, we're at this level, so that's significant, and this is significant. Then we have the quadrant levels here in that wick. Okay, so these are sensitive. I would like to see if this is going to continue, price drop lower to then go higher. But again, long range targets up here. Before it gets up there, we have these wicks, the wick quadrants and the 8th levels. So all of those things could be used as targets. We have this high here. That's a monthly high. it's going to end up being a previous monthly high. So we'll see how the next month's candle, when it opens up today, how it chooses to deliver. Is it going to run up above this high, sweep that, and then use that as counterparty to then start trying to attack lower prices? You know, that could be the case. But we'll just have to wait and see. But yeah, if this continues, this could be a long range target. It's not too long range. And then of course this high up here could be targeted. It's could either do that or react from here and then start to drop into this, and then we'd be able to frame something going into that. And we'll see how the dollar ends up transpiring. But yeah, if it's bearish, it's gonna have to stay below this wick midpoint. Same thing with this. And we have to stay above the wick midpoint here as well, if it's going to keep being bullish. Okay. Go to the weekly chart. We have a high, lower low, higher high. So this is actually a bullish breaker too. So just another reason why the midpoint of that wick we just outlined should not be taken out. Sell side, buy side. It was a market maker buy model. We talked about this. So I'm not going to get too deep into that. You can go watch last couple of weeks of videos on Sundays. Outline that whole entire thing. We also outlined this sell-off too towards this low. And it was a market maker sell model. So look, sell model, right? Consolidation, accumulation, smart money reversal, distribution, redistribution, and speed to get down below the low there. And then it turned around, okay? And then turned into a market maker buy model. So we're always in a buy or sell model, always. It's a good testament to that as well. All right, so that's my opinion and thoughts on this. I'll give you guys more updates if I do see new stuff unfold. What the hell? Failed to. It's really up here. Yeah, so with the dollar, as you could see in that markup right there, we were absolutely looking for this monthly level up here to be targeted. I did mention that if it can't get up there, we're inside that quarterly bearish breaker. Okay, and so now with new information that's being shared with us, we can now be flexible, right? We're inside that breaker. If you go to the monthly chart, you could see it even more clear. Okay, and now we're breaking lower. If this candle here gets traded through, that is a monthly change in state of delivery. That puts in perspective the equal lows down here getting targeted. Okay, and if that happens, then, you know, we may see the indices and foreign currencies rally. Okay, we may also, what do we see here? Let me know in the chat. I'd like this to be interactive. I don't like to just talk at you. I like this being interactive. I know you guys like it too. I got a lot of good feedback when I'm more reactive or more interactive with you. Some people just don't say anything, so it's kind of stupid. So no, we're gonna get there, Miss K. I appreciate you hopping on. Welcome, by the way. We have talked about a reasonable amount of stuff though, that I do encourage you to go rewatch. It's very important. Foundational, contextual, fundamental, more macro type of perspectives. But now, of course, you know, you showed up at a really good time. We're getting into the dollar, then I'll do the foreign currencies and then the indices. And then maybe later, if you guys have any other stuff you want me to talk about, we can get into it. But yeah. All things I need in my life. Well, welcome. You know, stick around, see how you like the calls or this call. If you like it, we'd be happy to see you here more often. Right? There's a ton of value that I share here. You can just ask any of the other students that are on right now. Small community, but we got big outcomes. And again, I'm live every week. Done this for years at this point. Privately, I've done it more so than publicly. But publicly, it's been 2 years now on YouTube, and it's honestly been a pretty good experience for everybody and fun for me too, right? Because I know I'm helping you guys. So that's why I do this stuff, you know? So yeah, welcome, Miss K. Appreciate you hopping on. Empire said, trying for my tattoos today. I'm listening. Okay, for sure. You can always rewatch it too, or just hit me up with any questions in my DM on Discord or on my Instagram, which is at WMG Trading. No special characters. Don't get fooled by some of these idiots on social media trying their best to impersonate me. Yeah, let me see. Did I miss any questions? So yeah, when we're looking at this chart, what do we see here? Right? Aside from the fact that the breaker's holding price went up, we were looking to see if this would have enough energy to get up or enough interest to get us up into the monthly fair value gap. Obviously, it has stopped just short of it, which is totally fine. We had this breaker here, this inversion fair value gap that we were watching. They worked until they broke down. We also talked about this inversion as our invalidation. And once it gets broken, I mentioned before the fact, just go back and watch the replay, the videos, that if we get down through this fair value gap, it's going to look to try to target sell side probably. And what do you know? Once it did that, it was off to the races, targeting that low. So now we also have this weekly inversion, and we also have this buy side delivery that's now created a bearish breaker. Okay, this is also happening not at a random level. We are at a quarterly, monthly bearish breaker level. So let me ask you this, okay? If this was a 5-minute chart, okay? If you saw this happening, what would your immediate thought be? You see a breaker here. We got retracement. It's very hesitant to give crazy displacement that would make it look like it's going to target this high. We're leaving gaps available. We're accelerating pretty aggressively, leaving a rejection block. Can't even get outside the breaker candle upper part, like that last down candle. What would this be telling us if we were on the 5-minute chart? Well, what it'd be telling me is we have relative equal lows down here. Okay? This looks like a retracement to simply go lower inside of a breaker that's bearish. Now, of course, we have this bullish order block here. So we're going to have to observe how the midpoint of that is respected. If it hits that and then immediately starts to aggressively run higher again, then we may have to consider this level once more. But given what the response is here, given how nasty that breakdown has been, given the fact that we can now paint a possible scenario that includes a market maker sell model, okay? Because that's what this looks like to me. We went higher, and now we're going lower. We have very obvious relative equal lows down here, right? And then again, we also have this as a market maker sell model. Sure, is that low? Yeah, it's this low. So I automatically see when this took place the other day, we also got respect to that inversion fair value gap. Look at how many times price has proven to us that we are no longer bullish anymore, at least from this perspective. We got a wick into the inversion fair value gap that we used as a validation level. And then we got the breaker here that's now been totally violated for bullishness. And now we just turned this low, high, lower low into a breaker itself. And we inverted yet another fair value gap in here. So with this stuff being considered, we have accumulation, manipulation, distribution. Okay. With all this stuff being considered, should you have any thought process of these highs being taken out? I wouldn't. The only way I would look to even try to consider that is if price was to start to get way up from this high to that low. If this stops here, it's going to have to stop here. Otherwise, again, it's just going to confirm in a more deep way that we are sincerely in a market maker sell model now. and we'll just keep targeting lower prices. And once price gets below this, that's accumulation. That's accumulation. So every time it breaks through those levels, actually put that back. So every time it breaks through those levels, I will be considering these previous levels of distribution that turn to rallies, right? So accumulation, manipulation, distribution. So that low there, the last sell-off before the rally on the left side of the curve, which is, again, part of the overall accumulation in this buy setup that went higher. Again, we mapped out this buy model too. Just remember, think about this. Looking back at some of this information, do you guys remember we talked about this gap? We talked about this gap, right? We talked about drawing up into that once this high got taken out. So we framed that out, and now we're over here. So just like what we did over here and what we do with every market maker model that shows up, when the accumulation levels are violated, when we continuously see the prices supporting levels like this, right? Wicking in, it's leaving gaps available. It's wicked in here in that inversion, reclaiming it as a bearish fair value gap. This was a market maker sell model. We have a failed breaker in here to go bullish, which supported for a while, but now it doesn't, right? It broke through, it failed. Because of all this stuff, it's now very logical, especially if we open up this week, see it rally up, and it can't even break through this wick. It's very logical for us in that case to then look for these lows to be targeted. These lows, it's relatively equal. This low here, you can also measure out the midpoint of the accumulations as a target. So the midpoint of this can also be a target before we get to here. Because, you know, things may not always go through the levels, right? It may hit a level that's closer, right? And sometimes that may be part of the accumulation. Like if things were eventually going to fall in line with this massive rally higher on the bond, on the yields, and this massive decline on the bonds, if this is true, if this is not lying, because someone's lying, right? It's when there's a Kraken correlation, someone's lying. There's manipulation happening on the back end that we're not privy to. But if this is going to be what's truly going to fall in line, and the markets are all going to fall in line with this, which sometimes they do, a lot of the times they do, because interest rate markets are so significant. But if that's the case, then we should see the dollar, if it sweeps this low, immediately start to come back up. And then once we get back above a level like this, I will be confident that that'll then turn into a buy model. But for now, I'm not going to believe the bonds and yields at the moment, right? Because everything else is supporting the other perspective, right? It's supporting lower dollar because dollar's going lower. Currencies look like they want to go higher. And it looks like the indices may, you know, depending on how they treat this order block, may end up going higher as well. But again, me telling you the bias as quickly as I just did, right? Because that's my opinion. That does nothing for you if that's all you take and then you leave, right? And you're just looking for signals. I don't just give signals. I'm trying to get you to understand why this is being supported to go lower and why the other assets should be supported in the opinion I have for them as well. And what would change things, the context, what helps me support the fact that this is going lower, right? And that's kind of what I want to dig a little deeper into right here. So again, we see this inversion fair value gap. We see the breaker that's now formed. So that down candle there, that's a PD array that needs to be violated if it's bullish. We have a gap here, and then we have the inversion fair value gap. So that's our 3 PD arrays in close proximity to where price is at. And that is how we utilize, well, the third PD array would be obviously this up here. So the breaker, if we get up above here, that'll be a 4th PD array that gets violated, turning off the cells. And that very last one, in my opinion, that would be this, the breaker. If we trade above that, we have 1 PD array, a 2nd PD array, and then we have this fair value gap in there as a 3rd PD array. The last one, the highest one in that, you know, layer of 3 PD arrays that's above where price is at currently in this downtrend, the last one that gets violated is your trigger to then, for this time frame, go from one side being bearish to now being bullish. And you just flip the logic when you're going to look for price going the other way, right? Like if price was going higher and you're trying to validate if it's going to go lower or not, or if that bullishness is worthy. Like in this case here, when it was up here, you guys remember, if you go back to last week's call, we literally talked about our 3 PD arrays. We're doing the same thing this week as we have done every week, right? But you could see when price was up here, we had the inversion fair value gap, we had the breaker, and then we had this low here, we had volume imbalance, so on and so forth, right? And I said, if we break down through this level here, that'll be enough for us to then think that there may be a chance for us to get down to here. And I even mentioned this breaker before. I said, if it gets down there, this will be a breaker and it'll probably offer an opportunity. And what did it do? It offered an opportunity on Friday, right? It wicked into it and then dropped lower. That is a really clear sign that this breaker is a balanced price range that can be respected, right? And trustworthy as we look to see this market maker sell model unfold, right? So this breakdown below this now triggered my interest for this to be a sell model. We came out of a buy model that formed. We had a gap in here. You could see how price, stuck to this level a lot. Because why? Because it had to balance out that range before it left. Then we created accumulation, manipulation, distribution, rebalance, redelivery. Accumulation, manipulation, distribution, rebalance simply was offered there with this candle. It doesn't always have to be a heavy retracement, right? If it's very fast to get to a level like we talked about, it could just be a simple wick that rallies up, right? The same thing when you see this stuff on the lower time frame. If this was the 5-minute chart, I'd be looking at the very same levels, right? It would just be a lot more fast price action, supposedly, right? But yeah, if you go to the daily chart, by the way, if you haven't noticed, and you compare it to the seconds chart, it may look faster, but if you put them side by side, price is the same price. It's moving the same speed. It's just one time frame looks slower. And one time frame is a little bit more meaningful when it comes to the narrative as well. But yeah, so again, given everything that we see here, we're trading back into this range. I would like to see if this can continue. We got this inversion here. So let me actually take a screenshot real quick, just so we can have that. Start cleaning this up a little bit for you. Okay, so we got that monthly wick midpoint. I'm gonna actually move that. We do got the monthly wick 25% level. Oh no. Almost knocked a bunch of stuff over. Whoops. Yeah, so monthly wick. Dude, I hope that doesn't fall. Shit. That would suck. So yeah, that monthly wick 25% level. I'll keep this stuff very obvious so we could see it. You can kind of see converging levels in here. So we had a breaker that was part of the monthly wick midpoint. So it's laid over top that monthly wick midpoint. So that's a PD array anchored to a quadrant of a higher time frame wick level. So if you have been paying attention to some stuff that ICT's talked about over the years, how do you select good PD arrays? Well, if you can have a higher time frame wick or a higher time frame PD array, break it down into quadrants, especially in wicks, and you drop down to the lower time frame as you're trading in the session you like to trade. If your PD array at the right time can be laid over top of a quadrant and the narrative is supported going, in this case, lower, a lot of times that's high probability. That's a high probability PD array that is going to be utilized in some fashion. And, even if it was to fail to go lower, right? And price ended up breaking through the breaker. Remember, it has an inverse nature to it. Every PD array has an inverse nature to it. So even if it fails to go lower, right, if there's still an argument in that case for it to go higher, say there's equal highs up here, and it's still laid over the quadrant, it still could be an opportunity. You just have to obviously have enough experience to be able to switch perspectives like that. And you have to know when to do that. You don't just do it just because. Everything's got an inverse nature to it. You got to be very cautious with how you utilize the inverse nature. But again, this is very significant, right? It's a monthly wick, a daily bearish breaker that's laid over top that monthly wick quadrant. Look at the sensitivity. Then you also have this displacement. Let me see. So we got this weekly fair value gap in here. That's this one right here. That's caught in between the monthly quadrants, 25 and 50. So look at how significant that PD array is. And again, this is all setting up, in my opinion, given the fact that there's a wick there. See how we respected the lower 25%? See how this breaker, when we traded into it, we couldn't even get to the 50% of the down candle. That's the breaker block. Well, both of these are, but I really like to see that we stay in that the lowest one. Or you could take the whole range and measure out to the 25 and 50% of that range. That's where you expect, if you're correct on the narrative for the breaker, the lower 25, lower 50% of the breaker candles, the breaker block, you want to see that be respected. Same thing with bearish order blocks, right? We have a bearish order block here on the weekly. That's this movement. Okay. Price is now broken down through it. Right there. So right here. So what happened? Price rallied up into the lower 25% of that weekly bearish order block. See that? We also have a weekly rejection block here. See how beautiful that is? See this large wick? 50%. Bodies couldn't get laid over top of it. And we started to decline aggressively. We have a lot of things converging. And don't forget, we're inside that quarterly / monthly bearish breaker. So that all this context makes this change in state of delivery very significant. And it makes this breaker more significant as well. And it makes this market maker sell model pretty likely to unfold, given that there is an anchor at these higher time frame levels that have responded. It's not just because they're there. Prices utilize them and responded aggressively away from them. Okay, so my anticipation, based on what we see here, my logical interpretation that this is going to keep going lower based on the contextual ideas I just shared with you, I hope that they make sense. I hope that you can see the characteristics when price is using these levels, right? What is the candle relationship showing you? We're staying in the lower 25%. We're leaving fair value gaps open. We're inverting bullish PD arrays. All right, it went from a bullish PD array that we used to buy to now inverting. So we can now look to use it as a potential sell-off anchor point. And if we retrace back into it, again, I'm not going to take this off as a likely level to push price lower unless we were to break from this high to that low's 50%, and that puts us right here. So simply getting us outside of this breaker candle, that would be enough for me. Okay? That would be enough for me to then try to go higher and target this, and then eventually the monthly fair value gap. But now this is on the back end. We're going to put this on the back burner, and we're just going to continue to push this lower. So my objective. So yeah, let me know in the chat if all this stuff makes sense. Give me a 1 if you're getting value. Don't forget to like the video, subscribe to the channel if you're new. It really does help the channel a lot. Shows YouTube that what we do here is worth listening to. I think it's worth listening to. I know many of you think it's worth listening to. So yeah, it'd be awesome if you guys could help me in doing that. Yo, what's up, Omar? It's just good to see you, brother, as always. Hopefully our one-on-one yesterday is resonating with you still. Talked about a lot of stuff. But yeah. Okay, so Maddie says good. Omar says good. Beautiful. Love to see it. So yeah. With that being the case, I already kind of laid out what my assumption is. So invalidation will be right here. Okay, yeah, I don't know why I didn't have that as a template already. Yeah, so that's going to be, so I got a lot more writing on the chart than I have on the charts that I engage. But again, I'm trying to make, I'm not here just to look smart. I'm here to get you to really understand what we're doing, because what we do works. And if you don't know that just yet, just stick around for a little while and you'll see, right? You'll really see, not only just for me, but when you apply the stuff that I'm giving you, which is very sticky. You know, I've been trading ICT concepts for almost a decade. You know, I've been, trading and not really needing anything else for about going on 5 years now. It's nuts, right? So, but that's me, right? Me making money, me doing this, me doing that. It's not going to help you pay your bills. Hopefully it encourages you, but I want the charts to speak louder than anything that I could ever say. And I think that I do a good job of making that the case. I see it in you guys. So I know, I'm communicating things in a way that's effective. If people just give it a chance and go in and study, be patient, be willing to make sacrifices, go in there and take the good advice. Stop doing the shit that's messing you up. Stop over trading and over leveraging. That's going to be the reason that you never win and succeed, or you'll boom and bust constantly, right? Over trading and over leveraging. It's what traders do when they want to go to the graveyard, right? In the trading graveyard. There's other things as well, but maybe we'll get into that another time. But yeah, so I'm assuming that everything makes sense in here. Appreciate you, Daniel, Italiano. I love it. Oh yeah, appreciate you, Daniel. See, I didn't miss any questions. Okay, so again, invalidations up here. My expectation, we could possibly see something, accumulate, manipulate, distribute as we look to continue. And then once we break down through this, I would expect something like this. And then once we break down through something like this, maybe it takes time to get there. It could slowly get down into that, right? We do have a stop run down here. It's very light, but it's still a stop run. But then again, we also got relative equal lows there too. That's a huge liquidity pool that could be literally set up and seen before the fact. If we can, excuse me, if we can get, this market maker sell model to unfold. And again, all we got to do is get down below this, and then invalidation would then shift. It'd go to the high right here. So the whole accumulation level, because if this is a market maker sell model, we don't want to see it go all the way back up and then go all the way back down. We'd like to see shallow retracements. It could retrace as high as this level. That would just get us back to the breaker, right? And then depending on how that would be treated, would obviously be important. Coupled with this, it'd have to be a wick that shoots up into that, but then it, overall continues to drop. But we'll deal with that when the time comes. But I wouldn't be surprised if something like this is what we see taking place. I want to see the midpoint of that wick there. I'm not going to add another one because we already got the monthly quarter. It's pretty close to midpoint of that wick. So ideally, we get another candle that opens up, rallies, sets the high of the week. If we're really going to be bearish, start to accelerate from that point and then get us down below these lows. All right. So yeah, that being said, that is my opinion on the dollar index. One more thing too, you see how it looks like this on the daily chart? Well, when you go to the weekly chart, right, you can see beautifully it's accumulation, rally, We got another accumulation here. So once we break through that level, first stage distribution, second stage, and if we can get down, well, I drew that wrong, didn't I? So we can go like this, and then boom, getting us down to our target. That's what I would like to see if this can continue. Okay, we got this high here as well to that low. We got equilibrium right there. So just another thing that if it gets violated, continues to support this as second stage distribution territory, if we can get down below that. So that's what I would like to see eventually happen. Okay, and that's my opinion on the dollar. Okay. So yeah, that being said, let's move on. If you got questions, just let me know. More than happy to help. I appreciate y'all being patient and letting me discuss the important things that may not be the funnest and most exciting, most energetic, crowd impressing things, but they're all very, very important things. And I take my time when I'm teaching you guys. If you want people to teach in 5 minutes that don't prove shit to you, who you've probably been hit and miss utilizing their information with, right? There's a overwhelming amount of BS artists out here on the internet who have bigger followings, who may be doing backflips off their desk or whatever they're doing to garner attention. But the charts here, once you lay your eyes on what we do, that's louder than anything that they can ever try to do, as long as you're serious about trading. And if you're not serious, this is probably not a place for you anyway, so I can't help unserious people. But the ones that are serious, that keep showing up, I'm sure, I don't want to speak for anybody, but I'm sure you've been seeing a rapid change in what it is that you're doing in the chart, a rapid change in confidence. Or if you didn't have any light at the end of the tunnel, you came here, you see what we do every week, you see how the market dances to the song I play. And now you have a new excitement, a new belief that this is truly possible. Because I'm not a rocket scientist, okay? I dropped out of high school. I'm just a normal person like all of you. And I've had a hard life. I think that was very beneficial, probably where my grit comes from. I know we've all had our ups and downs and struggles and things we've had to overcome. But, that stuff just makes us stronger, really. And it's kind of crazy because when you look at traders that are successful, a lot of them had a hard life. A lot of them started from nothing. A lot of them put themselves in such bad situations, either from, personal choices. Maybe they got messed up or screwed over by people. Maybe they just were dealt a really shitty hand in life. But for some reason, they saw trading, and the grit that was built from those hard times kept them going. It kept them pushing because life already beat them down enough, more so than the market could ever do. And so they stuck to it. So most of these traders that have went through hardship, they've stuck to it. It doesn't mean you have to have a hard life to be able to have that type of grit, tenacity, and ability to keep going. But, we all have our battles and struggles. And, that's the beauty about trading, right? Anybody can do this. But it's very important that you have the right information. And again, only serious traders will take what I teach and share every week and take it serious. If they're lazy, unorganized, just give me an indicator, bro, type of people, saying this isn't going to be a place for you. Oh, give me a say. When do I buy and sell? I can tell you when to buy and sell, but what's going to happen tomorrow? What's going to happen the next week? You're going to come demanding that from me again? Be solely dependent on me? What kind of success is that? You can't get successful that way. Now, if I started a signal service, it'd be a little different because, my whole goal is to make it so people that come behind me or follow me are going to take good trades. I'm not here to put you in trades. That's not what this relationship is. This relationship is I'm teaching you to do it yourself so you can pass it on to your family, so you can do it for yourself to support good causes that you believe in, so you can change your family's life. It's not a guarantee, but I can guarantee for certain that you will gain a lot more clarity being part of this community. But I can't guarantee profitability because you have to follow the rules. You have to take what I'm doing and teaching and sharing with you and showing every week and go into the market and find it on your own. With my help, of course. Doing things on your own could kind of be difficult. I had to do it on my own. I didn't have a community like this. And when I did have a community like this, it wasn't even a community. It was a one-on-one experience that I paid almost $10,000 for to 2 people, aside from what I paid ICT. So it was a huge investment to get what I do here publicly, and it's super valuable. But that's why I do it. I know that not a lot of people have that type of, those types of means. So I make sure that I'm available because I needed this. I didn't need it to keep going because I already decided it was this or nothing, right? So yeah, I came from the charter group. So I can't even say your name. Yeldin. Sorry if I butchered it, bro. My bad. But yeah, I've been trading ICT since 2021. Been trading since 2019. So going on 7 years. Coming up here on August 4th. It's been a long time. Been a long time. When I think about it, it's wild. It's a wild journey. But yeah, so hopefully some of this perspective is helpful to you in terms of what we do here, who this is for. I like to define exactly who I'm trying to talk to, who I'm trying to benefit. And it may not be for everybody, just like trading is for everybody, but it's not for everybody, right? So they completely changed after the big move last week. Who completely changed? You talking about communities or people? What are you referring to, Tony? Of course, I swear on everything I love this game, and I'm understanding more. Being patient is how you get the best setups. Yeah. Michael Cave was in 2016 November. The lasted only 3 months. I'm not talking about one-on-one mentorship with ICT. ICT had multiple enrollments. The last one was in 2021. So you're going to have to do your research because you got some incorrect information right there. I have some friends that I literally was in the charter group with too. One of which is named CJ, and the other one that I'm really close friends with, his name is Blanc Oliver. He's literally amazing traders, by the way. CJ Trades and Blanc Oliver. They're really, really good individuals. And they do what I do, right? They come out here and give value. So there's not many people that I believe in this industry. Outside of the ICT camp, I don't believe in anybody outside of it. Oh, I guess that's not a true statement. There's like 2 or 3 other people. But you don't want to dilute your opinion by using normal retail concepts with something that's diametrically opposed to what is taught in ICT's community, right? And again, you can make money in all different ways. So I'm not here to hate on other styles of trading, but that's just my opinion. You know what I mean? Be nice, Empire. Be nice, bro. It is what it is. Yeah, he had multiple enrollments for sure. I got lucky. I got so lucky. I was very stubborn. I was trying to join sooner, but I was stuck in my ways. I saw ICT for the first time in my first year, and I was like, he's too complicated. It sounds, because everyone made it sound like you can just get an indicator and be good. And I completely ate shit doing that. You know what I mean? And it was just terrible. So I finally woke up after being at ground zero, right? At the bottom of the basement, lost all my money, had a new kid on the way. I mean, I was in such a crazy mindset when I decided to allow or to give ICT a chance. And I'm glad I did. I really am, because I wouldn't be here. I would have quit a long time ago if I was stuck with retail concepts, normal stuff. because none of this shit made any sense. If you think about it, none of it really does make sense. It's all lagging data. Lagging data can't tell you what's happening in the future. We're predicting the future. I don't care what nobody says. You know, if you're not predicting what price is going to do, what are you really doing? You're guessing. I don't guess. I don't gamble. Okay? We don't guess or gamble. I mean, you guys see just from being here, right? Does it look like we're guessing when we say price is going to do this or do that? Obviously, there's variables and anything can happen. It's still the market. But based on what we know in terms of analysis and how often the stuff works out, there's a level of expectation that's there. And generally that expectation is fulfilled. And if it, you know, for whatever reason goes wrong, we know how to expect things going the other way. We know how to build narrative. That's what we do every Sunday, right? And then we use that throughout the rest of the week. But yeah, so getting back to the chart here, we see that the British pound declined. We ended up tagging this gap in here. Had that highlighted last week as well as we traded through it a couple weeks ago too. We framed out this whole thing as a market maker sell model. You can, again, just go back and look at how accurate we were. We literally narrated this whole entire thing. I don't trade currencies anymore, but we literally walked this entire thing. Again, I have so much evidence that what we do works, that, you know, what we do here is so much, like so far from the typical. I'm not the best trader. I do take losses. I'm imperfect. But, you know, you got to stand on business when you got something that works. And there's really nothing wrong with that, you know? And it's a confidence that you want to have as well in your trading. And there may be people that, you know, disagree with what I do and whatnot, but you can't argue with the results, right? You can't argue with us saying it's going to go somewhere on Sunday and by Friday it's there and sometimes more. Right? Or if it fails, we get back in line midweek. And then by Friday, you know, we already were able to participate and correct whatever may have been missed. Right? There's just no arguing with it because I'm so public now. I do this stuff constantly. Every middle part of the month as well, I'm doing it every week. Right? Or every day, I guess you could say. Right? I'm only doing that obviously in the second week of every month. So if you haven't been here for those, you can go ahead and do that and come and kind of see what happens every day with us in my private group. And again, if I was saying anything that's BS or exaggerated, I have some of my private group students here on the call and they could come out and call me a liar. Tell me I'm a liar. You know, call me out. You have no reason to protect me, right? There's zero reason to protect me, right? And you actually do the trading community and anyone listening to me a service if I was bullshit to come out and say, nah, he's full of shit. But it doesn't happen. So there might be something there worth investigating, right? But yeah, so given that we had this SMT, price came down, price has now failed to break down. We did last week try to anticipate price getting down below these equal lows. I said that if it would get below that, you know, maybe we'll get a bounce. We do have a quarterly inefficiency down there. That price could have reached into, but you know, obviously it's, let me actually double check. I think that's just like a piece of it that was available. Yeah, it's just that little piece. See that wick right there? This displacement followed with this wick that's balanced. So price doesn't necessarily have to come down there, especially if it's going to be bullish. Right? Price really doesn't have to go back into the deeper parts of this. We already have a BPR up here. This is one very powerful piece of information here as well for you guys to note. When you have an imbalance like this and you have an order block and it's coupled with a wick that already offered buy side and sell side inside that displacement, especially if it's like closer, this is okay, right? Still, you know, same principle. But when price comes back down into that and you have an order block right there, maybe this is a moment that you would be waiting to see the order block get tagged into to catch a buy, right? Maybe that was the circumstance because you like the order blocks, for an example, right? Maybe that's your model. And maybe this was a 5-minute chart and you see that price does this, comes down, and then it rapidly leaves the order block available? This answers part of the question as far as why PD arrays get left available. There's other reasons as well, which I'm not going to get into all of them right now. But this is one of them. There's a balanced price range that's right above it, or a balanced segment of price delivery that's refusing to allow price to come down here because it doesn't have to go down there. It's already offered price, unless it's going to give it up and, we turn and go the other way. Price is clearly showing that it's refusing to want to touch this order block. Right? That's not random. This happens all the time, especially if there was like a wick. Well, not especially, but it's the same thing if a wick shoots, say on this candle, say there's a wick up here, right, that shoots up, then we get this displacement and there's that little gap in there, right? And it goes deep down to here. But the wick on this candle goes up to here. And there's a small little itty bitty gap in there. That's the true fair value gap that ICT tries to have us look at. He's mentioned this in calls. I'm not, just pulling this out of my ass. Like, this is stuff that he's taught already. But most people, again, everything goes over people's heads because they're in here looking for very particular buzzwords and they don't care about anything else, which, everything else is the context of why that specific buzzword should work out. But, that's why people struggle with this stuff. They have incomplete understanding. And it is what it is. So in this case, this is a good teaching lesson right here, where price goes down into this. Maybe it looks to try to reach one more time. It can. That's permissible. But preferably, if it is going to be bullish, it'd be better if it kind of just left it alone. We do have the failure swing in there. So again, there could be a cause for it to go down into that. This is a quarterly perspective too. So, that may take a little while. But we'll see what happens, right? We have this high here too, to that low. Got that midpoint. So that is being treated as a balanced price range, right? Why is it a BPR? Because we got a buy side delivery, sell side delivery, and price left it breaking the high aggressively. And then, so when price came back down into it, respected it up to the midpoint, respected it up to the midpoint of that wick, which is respecting that balanced price range. So all of this is anchored in this balanced price range. So this is all part of that context of why price is holding up and going to the upside. Okay. And now it broke down a little bit. Again, we called a sell model in here. So again, we walked all of this price delivery. It was sideways, but it didn't matter. It doesn't, I don't care if it's consolidated or not. We're still able to fall in line with what it's doing. Okay. So hopefully that context makes sense. This is a shit show. Anyone that's trading the currencies, God bless you, because it's a shit show, right? There's a lot of things happening. We've obviously called this asset just as accurate as an indice, but it's too risky. You got to be very short term with your targets. I think that's why we've been able to be accurate as well. We've had a lot of short-term targets being looked at rather than extremes, right? With large trending ranges. There's been some trends, right? And again, we've mapped out all of this. Again, you just go back and look at some of the replays from whatever time you want to go double check in regards to what we've done. Just find a date, find the Sunday, and go look and see what our opinion was. And then look at the result. And that answers a lot of questions. But yeah, so again, because this thing is going higher, because there's a pretty solid refusal to go lower, there's a heavy interest for this to want to go lower, assuming that this that we talked about earlier holds up. I would like to see continuous context to see this go higher. Look how beautiful that inversion was. Got to incorporate the volume imbalance too. Okay. And again, we got this high up here. It's slightly relatively equal. Peaked above it a little bit. There was SMT up there, but now that we're kind of racing back up towards that, we've already delivered the short that was offered. We also called the sell model in there. Again, just go back to the call 2 weeks ago and you'll see that we were talking about this drop. If it wasn't on Sunday, just check the Tuesday call, right? Let me see, that was on Monday. Is there not? Oh yeah, there was a Tuesday right there. Yep. So yeah, just go double check that Tuesday call if you wanted to double check that. Remember, we're live here on YouTube Sundays and Tuesdays, right? If you look at something on Sunday and things weren't really pointed out, just go on Tuesday and you can rest assured that it gets pulled out. But yeah, so because this is continuing to go up, wouldn't be surprised if the dollar keeps accelerating with the market maker sell model. Would not be very surprised if we look to target this. That's a long range target. So, we'll see what happens. I think that this will probably have more, well, obviously because it's sooner. It's a little bit potentially more reliable, right? It may be easier to target that. But we'll see, obviously. Gun to my head, I think that unless this inversion gets traded back through, I think that we'll be able to get back up here. Got this bearish breaker here that was respected for a minute, and then it wasn't. So now this breaker is now also an inverted PD array in itself. Okay. So I'd be paying attention to that. I'm going to be paying attention to that. And just like with the dollar, how there's a gap up here, how we don't want to see it really go up there. We want to see this wick get respected and be aggressive. It's going to be the same thing with this candle here. All right, the next candle that opens up, I'd like to see it drop lower. Maybe it looks to wipe that out because, again, this is Friday's low. So that's pretty important liquidity. But as long as we stay above this, and as long as we stay above these volume imbalances in here, which is also a new week opening gap, I'll use that as my 3 PD array triad for validation. So as long as we stay on a closing basis above this, what are we doing? We're going lower to go higher. So when I'm looking at this high up here, I'm thinking market maker buy model. Okay. So that is what my underpinning narrative is going to be focused on. Okay. So let me go look at some of the comments, see if you guys got any questions. Maybe your precision comes from your glasses. I don't really like these glasses, but they're just really, really strong. Very helpful with the blue light. But yeah, I've never really liked these glasses, unfortunately. I spent like $50 on them. I got them and I'm like, Apparently they're the best ones to protect your eyes, so I need that. I think we all need it, right? So Daniel said, I have a question. Why do you trade? So I don't trade British pound or euro whatsoever. I used to. I started with GBPUSD, but there's too much stuff taking place when it comes to fiat currency for me to feel comfortable that a black swan event or heavy manipulation, which is generally there, but like manipulation, like they shoot a wick like 500 points up on some data feed, but then on some of the others, they don't do it. I'm talking about like that type of manipulation, not like typical, price manipulation in Power 3. I'm talking about like they're trying to wreck people on purpose type of stuff, like not normal. I mean, look what's happening, right? We're de-dollarizing the world. People are pulling away from the dollar. Currencies are collapsing. All these countries are trying to hike interest rates to save their currencies. Cryptocurrency is trying to become part of the financial system. I mean, this stuff is happening. Digital dollars already created. Like things are already in motion. So stuff is gonna happen. Fiat currency, we're already beyond the 100-year limit for fiat currency or any type of currency, right? They always have a 100-year lifespan. If you look back in history, we're a little bit over that 100-year lifespan right now by a couple of years. And it's ironic that at this time, they're aiming at the financial system. There's a lot of stuff happening. We got the AI revolution too. So, I mean, there's just so much stuff. And AI needs a digital money so then the agents can transact. Again, this is where we're going. You got to be, all of you, I encourage you to keep up with everything that's happening. Because the world that that I know, that everyone knows, is completely changing on the back end. Money itself may end up changing, right? They're talking about it constantly. It's not something I'm conspiracy making up. It's what they're talking about. They're saying it publicly while everyone's distracted with wars and drama here, drama there, and this person, that person doing this and that. It's sleight of hand to the max on a global scale, you know? So it's wild. It really is. So just keep your eyes open. You know, I'm into all this stuff. So if any of you guys want to talk and have a conversation about it with me personally, I love those conversations. So feel free to hit me up. So I agreed on FX markets are bad. Yeah. Again, we're still able to call them, right? We're still able to find setups. I mean, we called some pretty heavy moves over here with this market maker sell model. This was a bearish breaker. I literally called that. Saw this wick get respected, called that as another market maker sell model. And then, as you could see, it ended up fully fulfilling our target. So it's still able to get, you know, analyzed, but, you know, there's better markets. Why don't you just trade the better market? The indices, they're a lot more professional. And every broker doesn't have a different data feed for indices. We all have one futures contract data feed. And I mean, it's just as simple as that. Just that alone shows you there's some shenanigans going on when it comes to Forex, right? But it doesn't mean you can't observe it, and doesn't mean that it isn't impactful and helpful to the overall analysis process. You know what I mean? Yeah, me too. I'm just focused on indices too. But again, we have a depth of analysis, so it's very important to see how the breadth of the market is in total. So then we can get a good read, right? I was talking about market when I said change. They faked everyone out, then bombed. Yeah. Let's see, dollar is doing great, especially against Bitcoin and gold. Yeah. Yeah, it's very interesting, huh? But the dollar at the moment is taking a shit. So we will see what happens. We will see what happens. I'm invested in crypto. Maybe if we have time, we'll go over it. But yeah, so again, hopefully you guys understand all the stuff that we've talked about so far. My invalidation, again, it's going to be over here. Zoom in a little bit. So we got this inversion fair value gap. We got this breaker that's now an inverted breaker. Oh, what the hell? Yeah, just do this and then we'll get to the indices. So yeah, we got that inverted breaker block. So up to that midpoint needs to be respected. And then of course we have this. And this is my invalidation level. Okay. So do you guys have any questions about anything? Let me know in the chat. Let me just double check. Okay, no, I didn't miss anything. Again, I appreciate y'all being patient, sticking with me, and, you know, gathering some of the wisdom that I've gained over the years. It's not all about when are we going to buy and sell, right? It's not all about that. There's other things that influence, you know, whether buying or selling is important and whether you can trust it. How can you trust it? You know, how can you trust and believe that this is something consistent that you can rely on eventually? You know, that doesn't come from me giving you a signal or telling you what the bias is right away. I did just kind of throw out what the bias was for all the assets in, you know, 2 minutes, probably like 15, 20 minutes ago, right? But again, you know, some people come for just that. You know, it's great and all. You know, hopefully they do well, but it is what it is. Starting to lag. Oh no. Is anyone else seeing? Am I lagging for anyone else? Shows on my end that it's good. Stream is healthy. Stream is excellent. Okay. Not sure. Omar, maybe it's just you. Yeah, can y'all let me know in the chat if everything looks okay still? Yeah, this will be my invalidation, by the way. And we'll look to see if we can't get it to come up here. The target up from last week. I had this from last week. Clearly, we got right up into it. I didn't even realize that I had the magnet there. Forgot that we called it higher last week. We talked about the market maker buy model. Oh yeah, no, I remember. But yeah, let me know in the chat if everything makes, or if everything's clear before I move on to the indices, which of course is the main thing. I don't want to fly through it and have a shitty connection without me trying to fix it. It lagged for a second. Okay, good. All right, thank you, Daniel. I appreciate you. I appreciate you. Okay, so yeah, hopefully everything makes sense in here. And now let's go to the overall indices, okay? So when we look at the indices, we do still have this in here. Again, I'm not going to go over everything that we've talked about, but we have called this market perfectly from the midpoint of the equilibrium, which is where we had to have some pause. I talked about such a deep level of information about equilibrium, how to use it, how we were able to get in line with this. I literally called shorts here, both in private and publicly. I think one of these days or one of these weeks, I had the marathon that I ran. So I'm sure that a lot of you were here for that. So again, hopefully you guys picked up information from that. I'm just not going to sit here and go through all of it at the moment because it's just too much. But in a nutshell, where we're at currently with the indices, if the dollar continues to fall, we've now gotten a really strong change in state of delivery here. We're inside of this opposing PD array. So what did that do when it tagged it? It triggered in a counter trend response. And so now we're going into this new week with this change in state of delivery or bullish order block being engaged already. So we've already came into that. So the next candle that we may see may open up, try to take out Friday's low here, accumulate in this order block, and then look to rally. Obviously, that would then change our opinion entirely. Well, it would. Our opinion is that we may see this turn around and be a turning point if the dollar is going to keep going lower, right? But we got to see a little bit more evidence, right? I would like to see this truly get respected. If we can get a double change in state of delivery, that would be nice. So like this candle, for instance, if we get price to open up, drop down, create a sweep below this, as long as we never take out this midpoint, that'd be good too. And then a displacement above this high would really set the stage for all this trendline liquidity to be attacked. One of the catalysts that may set that up is if things in Iran chill out, right? If we really do stick to not bombing them or good results come from it or whatever, right? Some positive headline that is good for the market, right? There's a lot of manipulation happening with the news and the markets, especially the oil market. You could just see the manipulation happening, right? They don't bomb or do big things until the weekend, until the market's closed. And then all throughout the week, they go kind of soften up a little bit. And then towards Friday, they start to go crazy again. And then they go soft going into the weekend. And then it all starts back up again, right? So this has been a very repetitive thing that we've been seeing lately. So, you know, it's just one of those things. But yeah, so my opinion is that we've came off of this wick, came off this order block. We do have this mitigation block here. Price is now hugging the low of that. Why is this a mitigation block? Well, it's not a mitigation block here. This is a bearish breaker. But if I move up in time frame, it's now a mitigation block. High, low, failure swing, breakdown. And now we're hugging the low, which has a wick in there. See, there's a weekly habit. Yeah, I think we'll be better served if we outline the weekly wick instead. We'll keep this in mind, obviously, but yeah, I'm gonna keep that weekly wick there. So what are we doing right now? We're building the narrative. I could come out here and just tell you what I think price is going to do. But then again, the real question is, are you here to learn, or are you trying to use me as a signal junkie? Like I'm a drug dealer giving you drugs. That's how I see people that only need signals or come in and demand signals. It's like, okay, well, I give signals if you pay attention. But if you're not trying to learn, you're wasting your time. You're being pretty ridiculous. You're expecting to be in this war ground, this battlefield of financial titans. You're expecting to come in here and copy someone's opinion, be codependent, and think you're going to succeed by doing that in an industry that is made to make you get disintegrated, right? Where 90% of people fail. That's what you want to do? I mean, if someone's good, obviously, and they offer that type of service, so be it. Because some people can't trade, and there are people that do that. Maybe I'll do that at some point. It's a joke. Probably not ever going to do that. I think I do enough with what I do here. Those that pay attention, you kind of get all in one. You know what I mean? So, and again, I don't give financial advice. This ain't financial advice at all. I don't tell you to copy anything that I do, but hopefully you can go in and investigate what I show you, all the things that you see work, and then you can make your own opinions, and determine what you want to do with this information. But I know it works. My students who are in the private group or even the students here on YouTube, like Tony, right? And, handful of others, they know it works as well. That's why they're here. They wouldn't waste their time. So it's a little bit of time, and, whether you stay here for a little while just to get what you need and leave, or you hang around and become part of this family, regardless, you will get value. And I can guarantee you'll have a lot more clarity than you ever thought possible by spending time here. And you got to walk the rest of the way when it comes to profitability. You know what I mean? Nobody can walk that for you unless you're just simply using someone as a signal service. But again, how scalable is that? Not very scalable for the person taking signals. Now, the person giving the signals, different story, right? They could scale it to $100 million a month, let alone the profits they make from giving the good signals. It's a lot of work, though. It's part of the reason why I don't do it. And I don't want to give you guys the wrong mindset, right? So I'd rather teach you because I feel better knowing that I'm passing a skill set along that maybe you guys, if you have kids or have family or friends that may be struggling, maybe don't have purpose or direction in life, you can give them that. And what better blessing is that? What better blessing is there on the planet than that? Well, one, right? Bringing someone to faith with Jesus Christ. That's obviously better than anything you could ever do. But next to that, right? Well, way below it, but still, second up, giving someone a skill set that they can then use to better their life. So they can also go out and then do the same thing and help other people. There's nothing better than that, at least for me. I've already gotten where I need to get to in trading, right? I don't really have to learn anything else. And once I felt that way, I felt like, okay, well, is the mission over now? Like, is it like, what do I do now? Right? And I planned for, I'm like, what am I gonna do when I hit that level? Because I expected to be where I'm at and be able to come out and call the market every single day, have confidence when I go in. I expected that. Although I couldn't see it at first, and it was not always easy to see it, I still expected it. And luckily, I've had a couple of people, not a lot, but a couple of people that have helped me achieve that. Like the mentors that I paid and some of my friends that stuck with me. But yeah, so, you want to make plans for when you become successful. You know what I mean? You don't want to just wait till you get there. You want to expect it. It does a lot for your mental health when it comes to this stuff and like your focus. You want to expect success. Plan for it. How are you going to structure your trading business when you get there? That's something you got to plan for as well. You know, are you going to start an LLC? You're going to do an S Corp, right? What are you going to do? How are you going to structure it? Right? What about the taxes? Right? What's it going to look like? How much taxes are you going to have to pay if you make the amount of money you're trying to make? Right? Like, there's so much stuff that you can plan for. It keeps it interesting, right? It keeps you reaching for something, because we have to keep reaching for something. Because once you are able to make money consistently, as great as it is, you know, I'm fortunate enough that once I have arrived at trading, or once I did arrive at trading, I didn't think, let me spend all my money. I didn't think, oh, let me make $10,000 and then go buy some bullshit. You know, I started thinking about optimizing, long-term wealth preservation, protection, scaling, right? Within the realm of trading, right? Like any investment vehicles, stocks, long-term, crypto, gold, silver, you know, how to structure things so the tax man doesn't beat me up. It's hard for me though, because I live in California. So it's like you can't escape the bony tax man hand. They want taxes for freaking everything, for just breathing air. At some point, you're going to have to be paying taxes. Your tax for having access to the internet, tax for having a cell phone, like the service. It's a cell phone tax. That's what they call it. It's on my bill. Makes me want to throw up. So I got to get the hell up out of here, first of all. But you want to plan for your success. You know what I mean? So thank you, whoever subscribed, by the way. Oh, you subscribed a minute ago. I just got the sound. That's weird. I guess there is somewhat of a little lag, huh? But yeah, so I'm, again, hopefully already, just from what I pointed out, what you see in the chart, you know, those of you that have been here for a while can already assume what I believe price is going to do. We go through all these other assets so that when we get to the indices, we have a good idea of what we should probably see. Like, for example, if the dollar's going lower, the currencies are going higher, obviously the bonds and yields are kind of playing games, so we got to see what's going to transpire. We just had the interest rate conversation, so it's going to take a minute to price it in. And I think that's where the Kraken correlation is coming in, where the dollars, you know, rally, or is the dollar rally? Yeah, the dollar's declining while the yields, which, you know, are generally going to move together, they're doing the opposite, right? They're inverted. So this comes as a result of them trying to do things on the back end. And again, we just started, you know, talking about the interest rate announcement. They talked about it for a while, but it just came out. How much is to transition? So the Discord details, I mean, you could scan the QR code at the top of the screen to check the details out, and all the stuff that I offer. I don't offer a lot of stuff, but within the things that I do offer, there's a lot of stuff. I offer one-on-ones every quarter. Obviously, that's very limited. First people that get access to that is obviously people in my private group. Then if there's none of them, if I've exhausted all of them who are interested in working with me one-on-one, then of course I open it up to a family on YouTube, right? And just, you know, anyone that I feel is a good fit. Because again, that's not for everybody either, right? If you're lazy, if you're, you know, not a serious person, the Discord's not for you. It's full of people that are just as passionate as each other. It's a very tight-knit family type of environment. You know, we just all became a family, and everyone that joins, you know, I look to keep everything that way. So expect that that's what you're coming into. You're joining a community with someone that proves he knows what's talking about, or what he's talking about, every single week. In the private group, every single day. I'm on live every day, and I never miss a day. And same stuff happens every day. It's over and over. It's monotonous. It's boring. Well, for some people, it's super exciting for me every day, and the students that get to be a part of it. But yeah, it's for serious people. And if that's you, if you like my teaching style, if you want to be around the way that we do things every single day, be able to get your questions answered every day, have access all the time. Of course, I still answer questions through DM, But if you wanted to hop on a Zoom call that we have every week or every day, and be able to unmute, have a dialogue with people who, are either at the same place that you are or well beyond, because we have a lot of really good traders in the community as well, and some that are starting to taste profitability, and we have students also that have been here for a long time that are already profitable, pulling in lots of money. Again, there's no guarantee, because it's illegal for me to guarantee anything because I'm not a financial advisor. But what we do works, and there have been good results. And you'll do what you will with that information. And I hope that so far you guys have gotten value. If you have, definitely like the video, subscribe to the channel if you haven't already. But yeah, anything related to Discord, I have links in the description. Or you could scan the QR code. Or we could talk about it in a DM. But I think the first option is probably better. Just look at the details. So no questions. Okay. But yeah, so again, we're above this. We have a change in state. If it's going to be bullish, we're going to respect this. Okay, price is going to have to respect the midpoint of this order block. We targeted this fair value gap and this fair value gap. All you got to do is just go back and look at some of the previous calls we did. These didn't just get placed on the chart. And we didn't get confused through this decline. We knew it was going to drop when it respected equilibrium of this equilibrium, like of this range, right? From the high extreme to the low. It wicked into that, respected this bearish order block, rejected that, leaving a failure swing. But SMT, when it came to these other assets, you could see, was it the Dow? No, it was the S&P. So the S&P had a failure, had a run above the high. NASDAQ had a failure. Dow had a failure. So what happened? Those two were more aggressive to the downside. And all of that happened at the equilibrium of this parent range, okay, which is up there. Wait, what the hell? Oh, I guess it was plotted correct. So, yeah, it's right there, see? So the equilibrium, we couldn't even lay a body above it. It closed right at it. And then we shifted, changing state of delivery. That was enough to then anticipate when it broke this low. We then had a mitigation block here. High, low, failure swing, breakdown, large wick, change in state of delivery, equilibrium holding, dollar was rallying. And then we saw a retracement in here. We called this. Literally, we were part of this at the very, very tip. Well, maybe not at the very tip, but inside this candle here, we were near the high. And the opportunity that was offered, if I swung that trade, was over 800 points. It's not the first one. We've called multiple of those type of setups because we're on the higher time frame, right? So yeah. So again, in this case, we're hitting this lower part of this. It is a weekly wick. We do have a bearish order block here. We have this wick in here. So we got to just think, we got a swing high, we got a volume imbalance, and we got an order block. We do have a change in state of delivery here. We have a new week opening gap in here. So depending on how this order block here is respected, whether it pushes us up through some of these deeper levels or breaks down into this, that's going to decide really what's going to be more likely. We may be in a transition coming from this deeper bullish fair value gap with bullish SMT at the lows here. Okay. That may be an SMT and a transition that leads us to go higher against all this sell-off, especially if dollar can continue with a rampage going lower. Okay. So yeah, that's my opinion. Again, thank you guys for hanging out. If we're going to be bearish, we don't want to see it break the midpoint of this, right? Ideally, we don't even want to see it close outside of this inversion fair value gap here, or the fair value gap in general from the monthly perspective. This is the upper one. This is the lower one. Okay. We don't want to see it go outside of that if it's going to be bearish. If it's bullish, we want to see, again, this respect maybe wick lower, create bullish power 3. If I'm being honest, given how aggressive DXY is, depending on how it treats this breakdown here, like if we retrace and can't even get through this wick, and this retraces and we can't even attempt to either get beyond the midpoint of this wick here or the midpoint of the order block in total, if we stay above inside of this range here from the wick midpoint to the midpoint of that order block, right? If we could stay inside of that, I'm more so leaning towards the likelihood of them trying to now really turn this around. Of course, there is still a risk of this being a retracement into this order block to then keep going lower. But again, intermarket relationships are very important. That may be a retracement that you see that may look to go lower. You may see it like that. But is it safe to sell the indices when the dollar is declining, foreign currencies are rallying, everything else outside of that indices asset class is showing that it's going to go higher? Is it safe to short, even if it looks like it could, when all that type of stuff is happening on the back end? The markets are connected. This is why when you trade using one asset and you only look at that asset, you don't look at anything else contextually, that's why you can get played, because your depth of information is not enough. The markets require depth of knowledge. They require you to compare and contrast and, measure out and, look at other things that may influence the current asset you're trading. In this case, specifically the indices. There's lots of stuff that impacts these, and we talked about most of them today. When there's cracks in correlation as well, you got to wait a little bit sometimes, right? Like if every asset was doing whatever the hell it wants to do, then obviously we'd have to wait for cleaner situation, for things to open up and be a little bit more connected, right? When things are disconnected, it's low probability. ICT's first rule that he's taught about high probability is market symmetry. He has said that. It's went over so many people's heads. The amount of people that I see that don't use intermarket relationships properly or even refer to them at all is wild. It's like, did you listen to anything that was said? Like at all? Right? Well, it's kind of the nature of the internet and the world and human beings. We're stubborn. People say stuff and we won't listen until we get burned. And then we come and listen. But I guess that's kind of just the way it is. I know that's how it was with me, right? I'm stubborn. So it kind of just is what it is. So yeah, so hopefully you guys understand my perspective. As long as price stays above the midpoint here, I would like to observe. That's what we're going to do on Monday and today. Observe. How is it going to treat this? Are we going to drop down, maybe hang around there, accumulate, and then maybe take stops one more time while staying above this midpoint, and then accelerate aggressively towards this high? If that happens, again, we have this high. We have the relative equal highs here. We have this little gap in there. And then we have all this trend line liquidity. Something that I do like is these equal highs here. Did they leave that for later? Could be the case. How about on the Dow? What do we see on the Dow? Does the Dow show anything that may seem kind of obvious? Maybe not, right? Maybe not. I definitely think that these are obvious right here. So we'll see if it could target that. And then of course we have this one up here too, okay? And then the trend line liquidity for the S&P. SMT at the lows, that's part of the anchor. We have SMT at a higher time frame level with a change in state of delivery across all three indices on the daily chart except the Dow. So we'll see if that has an impact at all. But yeah, so we see at the S&P, see what the S&P did here, how it wicked into this order block. Couldn't even get to the midpoint. This is kind of the expectation that I'd like to see just on the next candle with the NASDAQ. So I would like to see if we can't do something like this. Right, accumulate, manipulate, distribute, and then keep going. And once we breach this high here, once this candle is violated, we now see, whoops, that was not an effective way to do that. Yeah. So yeah, market maker buy model, buy program would then kick in if we get up above there, okay? So I'll keep that as a note for you guys. I'll keep that on there. Okay, and then this will be accumulation turn distribution. We look to buy and accumulate buy positions in that. Invalidation would be the low of that range, or preferably the low of this up candle. If it's a buy model, we do not want to see a range like this that gets traded through the previous accumulation, get traded back through to the downside, because then we may have the market maker model flexibility protocol that I taught you guys a couple times this year. Something I talk about a lot in the private group, but yeah. So with that being said, thank you guys for the love and support. Appreciate the patience and the fact that you guys hung out with me the whole time. Again, those of you that are new, hopefully you got some value. Hopefully you see the value here. Put this to the test, right? Watch what happens. Watch what happens for the rest of the week, and just compare and contrast what you used to get from other people to what you get here. And I hope that, again, you guys are getting clarity. Maddie said this weekly analysis are giving us what the beginners needed from mentors, where we can ask questions, discuss, and clear our doubts. Yeah, no, 100%. That right there, that exact statement is the exact reason why I decided to open up a live call on YouTube, multiple, right? Because I don't see anyone else doing this. Nobody else does kind of what we do, especially in the private group. Normally you join, there's like 1 million people. Again, there's not 1 million people in my private group, right? There's not even 100 people in my private group. And I've kicked so many people over the years. It's insane, because I'm looking for very specific types of students that want to learn, and if they're not a good fit, they're not a good fit. It's only a filter, right? That's the only reason why it's private. It's a filter, because not many people are serious about things. And I'm a serious person, and I won't waste my time with dumbasses. What I have is very, very valuable to me, but I also know how valuable it can be for others. So I don't take it lightly when it comes to giving my time. But I give it, because I want to see you guys succeed, and I want to be a resource that's not like everybody else, that does allow you the freedom to ask questions. And you can feel confident that when you come here, they're going to get answered, even if the call takes 3 hours, right? And if the calls, or if the community gets bigger and more people hop on, and I got more and more questions, maybe it'll end up being 6 hours. Okay. I don't know. Who knows what the future holds, but I wouldn't even mind, because again, I started this with a goal, with an intention to help. And, if I wasn't going to make time for that and be flexible with it and actually look like I'm trying to help through my actions, then what's the point? There's already enough pieces of shit on the internet who say something and they don't do it, right? Who claim they're this way, but they're really not, who make promises, but never even follow through on them. But that's not at all what we do here. And it never will be. And if it ever got to the point where, it's unsustainable, then, I have to figure out what to do. Maybe hire other people, or, whatever I'd have to do to ensure that the quality would stay proper, or it's just not worth having a community. It's just not. Rather just go trade and keep to myself like I was at first. But that got boring, It's fun and, exhilarating and whatnot, but your mindset changes over time, especially when it comes to success. Some people, at least, so I appreciate your guys' appreciation. Again, God bless you guys. Let me know if you guys have any questions. If you're just hopping on, I encourage you to watch from the beginning of the video. There's a lot of good stuff in these calls. And maybe next time you could join us from the very beginning. We answer questions, right? We do all types of stuff to help you succeed. I can't guarantee it, but I know what I do works, and I've seen what it can do for other people as well. And shout out ICT as always. God bless that man. Um, I mean, he changed everything for a lot of people. Whether people love or hate him, the impact is undeniable, and it's given me a skill set that I've been able to learn my own way around, create my own system, my own process within him being at the core. I got my own style of teaching, and sometimes it resonates more, so I could just kind of communicate a little bit cleaner for some people. But again, that in no way takes away from what he does. I will always push students to go watch his stuff. But we all have different perspectives, and we all have different value, right? But it's the same concepts, just a different style within his concepts, which he's given us the freedom to do. He's even stated the way he teaches, he gives you a buffet. So then you could go in there and trust and believe that you have now created your own system, and you could live in that, and you can be proud of that. And you don't have to always feel tethered to him being the sole responsible party for your success. You can be your own trader. And that's one thing that I really have always appreciated about him and the way that he teaches. And that's why I, thankfully, was able to be well versed with what I do. So then I can also offer that to students as well with my teaching style. I don't just force you into one thing. I have a system that I use to determine bias. I mean, that's just default, but kind of just is what it is. You know what I mean? You'll still find your way around that too. You may like other PD arrays that are in this chart that I didn't mention. There are other things in this chart that I could highlight, but these are the things that are important to me to help me build the narrative to determine, is it going higher or lower? That doesn't mean that it's incomplete. That doesn't mean that I'm missing things or that you're getting incomplete information, right? It just means that this is what levels are important to me right now that help me decide whether I'm going to be bullish or bearish. I don't need every PD array, and you don't need it either to determine what price is going to do. They're all contextually helpful the more that you do know, but you got to be careful because having too much, it's going to cause analysis paralysis if you don't know where the pieces fit. Having all the information at once is not necessarily helpful. Having more advanced concepts when the basic stuff hasn't been proven effective for you yet, it's probably not going to be beneficial to you until you go back and get better with the foundations like Power 3, some of the core concepts that he's taught over the years, right? And if you don't have a model for brand new, you start with the 2022 model. If you're coming to join my private group, you're going to be pushed to look at the 2022 model because it gives you a good baseline. And then everything else, if there's any holes in there, obviously I'm here as kind of like a study buddy as well. So if you have questions along the way, you don't get stuck, and I can clarify and maybe, talk about something in a different way than ICT did to communicate the same message in a more effective way. But he does a great job though, you know what I mean? But he is, a little complex at times. He's gotten better over the years. And he's a phenomenal mentor. But sometimes you just need a different perspective on a similar topic to really make the light bulb flick on. And, that's all I try to do. I just try to help solidify, help clarify, help keep you on the rails, tell you what's important, what's not important, what may come later on, what's important right now for where you're at, depending on how much experience you have. Again, any questions that you have, you can ask someone that, may actually have the answer. I don't have every answer. I'll be the first one to say that because I don't use every concept he teaches. But I've been doing this for 7 years. I've had a lot of time to dig into most of his concepts. So I'd say I'm pretty well versed, and I have an answer for pretty much everything. But I'm honest if I don't, So I have other people that probably would have the answer too. I know a lot of traders, a lot of charter students. And yeah, so with that being said, let me just double check. Miss K, I'm glad to see you stay with us. Hopefully, again, you got value. Same goal, be independent. Yeah, that's the goal, right? But again, you want to be careful not to focus solely on that at first. That's the main outcome. Mastering the process, being organized, understanding risk. Where is price going to go and why? How can I trust that decision that I make? These are the most important things before thinking about money. Because when you do those things, when you knock those things out and get that stuff solidified with organized processes and all the things that are involved with that, that leads to making money. What's the point in doing analysis on the chart? We're trying to make money. We don't even got to think about it. So we got to pull ourselves away from obsessing over every trade and money that's being made early on, because the default, when you master the process, eventually it'll start rolling in. Sometimes slowly, sometimes fast. Some people it takes longer. Some people, they could do it in a year and be profitable and just hit the ground running. I have one student out of 220 students that I've worked with that has done that. One. And it was within a year. Right? Shout out Harley Trades on YouTube, by the way. If you guys want to go follow him. It's one of my students. He's not so much a student anymore, because he's walking on his own. But I encourage you to go check out what he has to say. He's a very, very amazing individual. Very young. I'm 32. I don't even think he can buy alcohol yet. But from the time he started, he had 3 months. He came to me. I think he has a couple other people that have helped him as well. But the core foundation, when he first got started, essentially, I think we did a good job of instilling that. So then he knew the right questions to ask. He knew the right places to look. He knew the right things to do, the right things to study, the right mindset to have. And he's bloomed on his own. And I couldn't be more proud of him. So I will always shout him out. Shout out Harley Trades. Go follow him. He's definitely someone worth listening to, someone worth watching too, because I guarantee you, mark my words, the next 5-10 years, if he keeps doing what he's doing, I don't know. The possibilities are endless. And I would be ecstatic to see him succeed. He's the youngest student I ever had. So I have a heavy investment in his success. So, yeah. So with that being said, I've talked your ear off enough. Again, I hope you guys got value. Don't forget to like the video on the way out if you haven't already. Subscribe to the channel if you're new. And let me know if you have any questions. I'll be around later. Hit me up on Instagram in my DMs, or you could join the Discord, the free Discord, and hit me up with a question. And if you have any questions about the private Discord where we go live and have conversations and do things like this every single day, and you want to be a part of that, you can go check out that information as well. Only if you're serious, right? Only if you're serious. Okay. With that being said, God bless each and every one of you. Appreciate the love and support. I hope you guys have a good rest of your weekend. I'll keep you updated if anything changes. And we will be live again here on YouTube. I would say be looking for the link around 5 a.m. It really depends. I'll get some feedback and see how many people will be up. If nobody's up, I'll wait. But we'll see. So either 5 a.m. Pacific Standard Time or 6 a.m. Pacific Standard Time ahead of the open. Okay? So yeah, that being said, God bless. Appreciate you guys. And I will catch you on the next one on Tuesday. Have a good rest of your weekend, you guys.